All right, ladies and gentlemen, boys and girls, let us go ahead. We are doing a chapter called exempt income. Exempt income means those incomes which will not be a part of your taxable income. मतलब on these incomes you are not required to pay any tax. ये correct है? The only section under which exempt income is covered in your syllabus, income tax law में we have additional sections also, but in your syllabus all we have is section 10. In that we have completed the biggest and the most important of all, that is 10.1 agriculture income. Apart from that, apart from agriculture income, we have also completed some smaller sections like 10.2 share of profit from HUF, share of profit from partnership firm. We have completed NRE account. We have completed exemption for non-citizens. And I think at 10.10D, we took a skip and we actually did 10.10 BC first. Okay. Not that I had forgotten 10.10D, but 10.10D is a big section and also important. You know, with 14 years of experience, I do understand which section requires more discussion and more time. And because I wanted to do proper justice to 10.10D, now we are going to start. Achha, 10.10 BC we did, then 10.10D we skipped, but then we have completed 10.15. So 10.10D we will be doing. First, payment that you have received from life insurance company. Any payment that you have received from life insurance company. See, first of all, you need to understand what is this concept called life insurance. Insurance is basically a safeguard against a contingent event. So there are companies which sell insurance policies. You have to pay them an amount called premium. That basically by paying premium, you buy the policy. Insurance is of various types. There is something called life insurance. Life insurance is to insure the life of that policy holder. That supposingly that person dies. Many a times, if you are the only earning member of your family, you have dependents. If you die, so there will be financial trouble for your survivors. And for this reason, you insure your life so that upon your death, your family gets money. That is life insurance. We do also have the concept of medical insurance. Medical insurance is where we buy the insurance policy for hospitalization benefit so that the insurance company will take care of our hospital bill. We have the concept of stock insurance, money insurance, motor car insurance. Insurance is a very, very big industry, but this is a focus on life insurance where you have paid premium and purchased a policy to secure your life. And if you die, your family members will get money. So is someone getting money from the insurance company? That money is called claim. So for we who buy the policies, premium is our expense and claim is what we receive in the form of income from the insurance company. If we talk about the insurance company's perspective, their final accounts is what? For us, we have sales and purchases. For them, sales and purchases are premiums and claims. Premium is their sales. Claims are like their purchases. Premium minus claim is like their gross profit. And then all the office expenses, if you adjust, then you get your net profit. That is how the insurance industry functions. Premium minus claim. Of course, with the minor amount of premiums that we pay and the crores of rupees of claim that we later take, insurance companies will find it very difficult to survive. Insurance companies make massive money by also making investments in the stock market. You should be aware that today the biggest investors of equity markets are actually insurance companies. Today, Life Insurance Corporation of India, LIC, is only an example of insurance company. ICAI is also doing insurance, HDFC is doing insurance, there are plenty of insurance companies. But LIC of India, one of the biggest investors. Adani Group ka one of the biggest shareholders is LIC of India. So what government did was they brought IPO in LIC. They got public money. With that money, they have used to invest for stake in all the group companies of Adani. And believe me, whatever is the downside of Adani stocks, government itself is a big stakeholder there. So long run mein, they cannot let those stock prices fall. In fact, if they fall, it's an opportunity to buy. But you are inter student, all this discussion is generally relevant with final students for making investment in stock markets. Bro, you complete your tax homework. That is more important. Some of you all are minors. I doubt whether you people must be making stock market, equity market investments. You do. With what money? You said yes. Achha. Like, matlab, pocket money is never good enough in student life. for our expenses also. But if you are making investment, I am extremely, extremely proud of you. One of the biggest regrets of my life is that I started equity investments very, very late in my life. When I say very late, it is after COVID. The first equity share, despite being a qualified chartered accountant, in COVID, I had completed 10 years of teaching experience from 2010 to 20. But I never took the risk of equity markets, despite having knowledge of financial management, despite having knowledge of valuation of securities, bond valuation. There is nothing that was not taught. But I did not have the money also. But I never took the risk. If you start investing in equity now, small amounts, and if direct investment is not feasible, you can go for things like SIP or mutual fund. They are going to, on your behalf, invest in those markets. In the long run, you are going to accumulate so much of wealth that you can actually, in your late 30s, early 40s, you can actually plan your retirement also. If in your 20s you have started equity investment, but only and only and only if it is in the nature of investment. If you think that you'll buy in the morning, then sell in the evening, then again next day buy, bro, you will have to sell yourself. There is this concept called futures and options trading, intraday trading. Futures and options will make you Ambani. Anil. 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 FNO trading will make you Ambani. But as I said, Anil. Because I don't know whether I ever told you about my history of FNO investments. When I started liking equity investments, I decided to enter into FNO trading. In 3 months, I earned what I earn in a year. Wow. So I did more trading, FNO. Not investment, but trading. Buy, sell, buy, sell, buy, sell. And by the way, you have to full day sit in front of the device to check the prices. Then in the next 3 months, I lost what I earned in 2 years. So at the end of 6 months, I was minus 1 year. Every part, every inch from top to bottom was red. Not a single inch in the body which was not red in color. Finally decided, thank you very much. I'll make long-term investments, but FNO is not my cup of tea. And of late, those who are making investments are probably aware of this, that it is SEBI ka direction that all the stockbrokers, whether you are having your demat account with Zerodha or Motilal Oswal or Sher Khan, the moment you log in every morning, the first warning that they will give you, every morning there will be a warning message that 90% people suffer losses in FNO. And those 10% who make profits also, they have transaction costs like securities transaction tax, GST, brokerage. So those expenses again eliminate the profits and convert them into losses in most cases. Single digit people are actually taking away all the money through FNO. And therefore, do it very, very carefully. Having said that, insurance companies are not making FNO trading company. They are making long-term investments. So that is also one of the incomes that they earn. Finally, if that insured event takes place, in life insurance, it is going to be death. So you are going to receive money from the insurance company. We are talking about exemption of that money received. Payment that I have received from. So we are not talking about the premium received by the company. Company is not the assessee. Consider yourself as the assessee here. So you are not going to receive the premium. You will pay the premium. What are you going to receive? We are talking about the claim money that you are receiving as a policy holder. We are talking about the claim money that you are receiving as a policy holder. This claim under life insurance is received on 2 types of occasions. One, on the occasion of death of the policy holder, the family member whom we call the nominee. So at the time of buying the policy, you have to decide who is the nominee. You have to give the KYC documents of your nominee. Also, general system is that people keep their spouse as the nominee, or financial suggestion is that then in that case, if spouse has to be the nominee, then buy policy in the name of spouse. No? You didn't understand? See, if you buy policy in your name, you will pay premium, you will die, she will get money. So buy policy in her name. Still you pay the premium. Still not understood? You wait back after class. I'll make you watch Pogo. When you only have to pay the premium, at least you become the nominee. No? So death is one occasion. But then also note one more thing, that policy has a tenure, that this policy is going to be in force for 10 years, 15 years, 20 years. Supposingly that policy tenure gets over. During that period, dying is not compulsory. If you don't die, you will also get something called maturity value of the policy. Life insurance companies pay you on two occasions, death and maturity. Now it depends on which kind of insurance product you are buying. Insurance products are of different range. They keep on coming up with innovative product schemes. There is an insurance product called term insurance. General knowledge you should be having. In term insurance, there is no maturity value. During the policy tenure, if you die, your nominee will get money. You are not going to get anything. But in other insurance policies, there is death benefit. And in case death does not take place, so you also get maturity benefit. That means, is that double benefit in other policies? So the premium obviously is higher. Term policy ka premium is lower because one thing is for sure, that the policy holder will never get any money out of it. And term insurance companies don't sell also easily because premium is too less and the policy value is too big. To give you a small example, when I went for term, again, it was a big mistake. I took term insurance very late in my life. That was also after 30. The later you take, the more expensive it is. So I took term insurance where I had to pay roughly 17,000 per year for a 1 crore policy because it was too late. They calculate your age and the number of years they will get the premium. On that basis, they will issue the policy and decide the premium. Now, my brother is 5 years younger than me and he took the policy only 1 year after me. So, almost at the same price, he got a 2 crore policy because of the age factor. Almost the same price. And then when I got 1 crore policy, my wife was, one day she is coming and telling me that 1 crore is too less. These days, what happens in 1 crore? At least try to get it increased. What is your plan, first of all? What exactly are you desirous of doing? So we have watched so much crime patrol. In those crime shows, it is generally the spouse who is the murderer. And before becoming parents, there was not a single day where we slept without watching a crime patrol episode. And at the end of each episode, one of us asked the other, "You will kill me like this only." And then they say that in front of children, you should not be watching these shows. So of late, we have completely stopped watching crime shows. We are watching Ek Mota Hathi. We have completely stopped watching crime shows because children, they get influenced very, very fast. In fact, you have to be very careful with your words also in front of them, because if they hear you speaking something, they start speaking the same word, and then it is difficult because they don't understand in front of whom what you can speak, what you cannot. One day his teacher must have taught him something in school. Teachers ka job hai, they teach. Then he is coming home. Everyone is sitting at the sofa. My mom is sitting. In front of my mom, he is saying, "Daddy, my teacher said no, it is bad manners." I bola, two tight slaps I will give you. Because kids don't know in front of whom what you have to speak, what you don't. Probably you should not be doing anything in front of your kids. So she comes and tells me that she is telling me that you should increase the value of the policy. Then I again approached the broker. Then the broker said, "Now again 2 years have gone since your 1 crore policy is in force." I said, "I want additional top up of at least 2 crore more, if possible total of 5 crore, but minimum 2. That also based on age factor, company will decide whether they will sell the policy or not. Then the company will actually send a doctor to conduct all your bloody hell. That doctor came, he did my ECG at home, he did everything, my diabetes, my sugar, there is not a single blood test. At least 40-50,000 ka blood test they are doing free of cost." Now here I had a big issue. I had my morning online lecture, 7 o'clock. The doctor said I had to take your blood sample fasting, 12 hours fasting. I said, "Come on Sunday morning, I don't have lecture." He said, "No, sir, I come early." I said, "Sir, My lecture is at 7 o'clock. You have to come by 6:15. Because after you'll put all those jellies for ECG, etc. Then I take bath and sharp 7 means 7. He said, no, sir, I'll come before time. I'll come before 6. 6, 6:15, 6:30, he has not come. And till the time he does not come, I can't have tea also, no, because that fasting sugar he wants to take. I started getting desperate. So without tea, no, my brain also does not work. I drank tea. Then I told him, you do your test, mera time ho raha hai, otherwise you get lost. So I was very rude with him also. Plus my blood sample showed sugar because of tea consumed in the morning. Plus I was angry, so blood pressure high. And plus I did not behave also properly. Company rejected my policy. They said, you have high blood pressure. Your blood sugar is high. And you are overweight. Abhi COVID mein 2 years I took online lectures. So like literally did not move also from one place. So I had gained huge weight during COVID. For these reasons your policy is rejected. Then I told the broker is ma'am ka brother's friend. Insurance ka agent hai na. Her brother's friend only. And I told him that your sister wants more money. So for that you have to manage the policy somehow. He said, don't worry, come to Calcutta. Here I'll manage everything. Bola, how? Bola, sir, you come. I said, okay, I'll come. Some function I had gone to attend. I called him that I have come here. Now, how can you give me the policy? Bola, don't worry, I am sending my staff. That staff came. He put the blood pressure machine on my hand. Without measuring the blood pressure, he only took a photograph. They need live photograph. Then he said, all other reports I will manage. Don't worry. He managed all the reports and gave me about 1.5, 2 crore ka policy extra. Over and above that, 1 crore. This came to 91,000 per annum, only for a gap of 2 years. Rule is that till the age of 60, I have to pay premiums. Fixed amount every year. So earlier you start, that fixed amount will be lower. Until 60, you have to pay. And coverage will be till the age of 85. So last 25 years, you don't have to pay that fixed amount premium also. And the amount of premium and the amount of claim, massive difference. Thus, term insurance policies do not give any maturity benefit. But other policies where premiums are expensive will give you 2 types of benefit. Death benefit and maturity benefit. Of course, death benefit ka money will go to family member. Maturity benefit, you will yourself get it. That means as a receiver, do you realize you have received 2 types of income? Money received on the occasion of and money received on the occasion of. Any money received on the occasion of death is going to be fully exempt under section 10(10)(d). No tax. In fact, insurance company, when you file the claim, see what will be the chronology. We take the policy, we are paying premium, we have the document, death takes place. Then family member, whoever is the nominee, will file the papers with the insurance company for the claim. Papers will include, of course, death certificate, the KYC documents of the nominee. You have to give a cancel check copy because insurance company transfers money in the bank account. So your check contains all the details, your bank account number, the IFSC, the name of the account holder, all the details. You go and check a checkbook, no, all the details are mentioned. So they know in this account we have to transfer the money. After doing that transfer, they send a letter home. We regret the death of Mr. So-and-so, obviously the policy holder. As the person was insured and you have filed a claim with us, we have credited rupees this much in your account number this, maintained with this bank, this branch on this particular date. They transfer and then send the letter. And last mein they add a line. Kindly preserve this letter for income tax purposes. Sir, because if that massive amount has come in your bank account, so income tax department will ask you, what is this for? What's your answer? Insurance claim, death case. Therefore, I will not show it in income tax because it is. But what proof do you have that it is insurance money? That letter you will have to present. So, tax part of it is very small. And today, again, a big thing that you are learning and going home. As I said, every day you'll get a new piece of knowledge. Ladies and gentlemen, take this knowledge perspective. Any money received on the death, any insurance money received on the death of anybody is going to be fully exempt. The insurance money received on the occasion of death is exempt from levy of tax. I am trying to bring in the practical implementation also of this section, how this section is implemented in day-to-day life. That letter will serve as evidence. Is that clear? But is dying compulsory? One day, yes. During the policy tenure, no. So other than term policies, the other policies are also going to give you maturity value. So is that also an income that you are receiving? This income is also going to be fully exempt under section 1010D. But here they have added the word if, which means here there is a condition. That means death cases, first be clear about that. No condition, exempt forever, without any condition. Any insurance money received on the occasion of death, fully exempt, absolutely no condition. Condition exists only if the money is received on the occasion of maturity. Any income received on the occasion of death is going to be fully exempt. Condition is existing only in the case of maturity. That means, do you understand? If the given condition here is fulfilled, then maturity will also be exempt. If the condition is not fulfilled, so death will remain exempt. Maturity money will become, death will remain exempt, maturity money will become taxable. Do you understand this? What do you want to know? What is that condition? Be clear. If I fulfill that condition, death, maturity both exempt. If I don't fulfill that condition, death still exempt and maturity money will become. Do you understand? So what do I have to tell you? What is the condition? You stay within your limits. Is what we will tell the premium of the policy. Bro, I never talk to anyone like that. Forget about talking to students, because believe me, whatever I am in life, students have made me. Financially, personality wise, success wise, fame wise. So random people also I don't talk like that. You think I'll talk to a student like that? Never. What's your name? Karan. My brother's name is Karan. So normally with Karan name ka people I talk like that. But this time it was not about you. It was about you stay within your limits. You who? The premium. The premium has to be within the limit that they have given here. If the premium is within the limit that they have given here, then the amount will be exempt on maturity. If it is beyond the limit, it will be exempt only on death. Maturity amount will be taxable. They have put restriction that in any policy, this is the maximum premium that you should be paying. If the insurance company is charging more premium than this, do not take that policy. They have put the limit, and that limit will depend on, this is slightly confusing. If you don't pay attention, you'll get confused. Please focus. You have to check the date of issue of this policy. When was this policy purchased by this person first time? When did you pay your first premium? You have to check that. You don't have to check today's date. Today is 24/25. You don't have to check today's date. You have to see, I must have started the policy 5 years ago, 10 years ago, 15 years ago. At that time, what was the limit? At the time of issue of the policy, what was the limit? You don't have to check today's date. You have to check the date of issue. Issue means first time I approach insurance company, I want to buy your policy. अभी मेरे से होगा तो रुक तो bet. First time when you purchase the policy, that date you will check. So I approach insurance company, I want my policy. I will pay your first premium and become your policy holder. Then I will pay that premium every year. Every year until death or maturity. I am not going to check the date of death or date of maturity. I am going to check which date I started the policy, which date I paid the first premium of the policy. The limit depends on that. I am now going to tell you the limits, but be clear. If the premium is within the limit, death, maturity both exempt. If the premium is beyond the limit, death will be still exempt and maturity value will become taxable. Do you understand this? What is the limit? Date of issue. If any policy is issued up to 31st March 2012, that means, can I say previous year 11-12? Then the premium should be maximum 20% of the sum assured. Sum assured means this is insurance language, simple language, we call it policy value. What is that amount of policy that you are taking? You'll pay a certain amount of premium. With that, you'll get a policy of a higher amount. What is that guaranteed amount that the insurance company will pay you on the occasion of death or maturity? You often hear people saying, I have insurance of 5 lakh, I have insurance of 10 lakh, I just said I have insurance of 3 crores. Of course, that's a term policy, so there is no maturity benefit. But what is that 1 crore, 2 crore, 3 crore, which we often say? That amount is the amount that the insurance company will pay me if the event takes place. That amount is sum assured. In simple language, we can call it the value of policy, the money that we will receive. Your premium should not be more than 20% of your sum assured. So, supposingly, I have policy of 5 lakh. So, the maximum premium that I should pay is 1 lakh, maximum 20%. If I have paid 90,000, is my premium within the limit? Yes. Death also exempt, maturity also exempt. If I have paid 1 lakh 5,000, is my premium more than the limit? Yes. So, death cases still exempt. Maturity cases taxable. Understood? Premium has to be within the limit. So, maturity cases will be exempt only if you stay within your limits. You who? The premium. Any policy taken up to 11-12. The premium ka limit was 20%. Any policy that you take on or after 1st April 2012. Now, do you understand? 1st April 2012 means 12-13 onwards. Then the limit was changed from 20% to 10%. Maximum 10% of sum assured. Rest of it is same. 20 is getting reduced to 10. So earlier in a 5 lakh policy, the allowed premium limit was 1 lakh, 20%. But now in a 5 lakh policy, the maximum premium will be 50,000, 10%. So earlier, when we paid 90,000, we were within the limit. Now, if we pay 90,000 on a 5 lakh policy, is that beyond the limit? Then death cases still exempt, but maturity cases. Is that clear? So earlier the limit was 20. From 12-13 the limit has changed to. Matlab till 11-12 any policy taken premium limit 20%. From 12-13 premium limit. Bro, 12-13 is 13 years ago. We are in 2025. Just in case you have forgot. This is 2012. You were there?
Yes.
I was also there. In 2012, this limit changed. In 2012 ka budget, this limit changed. It's been 13 years. So basically, today this limit is applicable. Any new policy you go and buy, you have to check 10 only. And that change also took place 13 years ago. It is not a recent amendment. So sir has lost his brain. He is teaching us something that has changed 13 years ago. For all practical purpose, iska relevance? Huh? Do we have to study this? Yes! Because it is possible you have taken a policy, 20-year policy in 2006-07 and you are getting the maturity in 26-27. You've taken a 20-year policy in 2004-05 and you are getting the maturity in 24-25. We will not check the year of maturity. We will check the date of issue. Policy was taken in 4-5. Even today we will follow 20%. Policy was taken in 13, 14, 14, 15, 15, 16. Then we will follow 10%. We don't have to see today's date. We have to see the date of issue of policy, the date of payment of your first premium. Understood? So even today it is relevant. And why? If I have to, make you understand, this was a prospective amendment. 2012 ka budget amended the limit of 20 to 10. But were there people who have already taken policies based on 20% limit? So their commitment to the insurance company now cannot change because of income tax amendment. They have to pay that premium, which is between 10 and 20 maybe. So your policies will continue as it is. But for new policies, the limit will change from 20 to 10. Any amendment that comes in the insurance wala part, it can always be a prospective amendment. Because on the basis of existing law, if somebody has already taken a policy, then you can't change the tax effect of that policy. For new policies, we can change the law. And thus, any policy taken from 12-13, we will apply 10% limit. But any policy taken up to 11-12, which is maturing today, so you don't see today, you see 11-12, and therefore apply the limit of 20%. Once again, if the premium is within the limit. Now you understand when 20 will apply, when 10 will apply. If the premium is within the limit. Yes, no. Death, maturity, both exempt. And beyond the limit. So, death, maturity. Fantastic. This is still not over, bro. Now next year. Until now, the auntie has not come also. This was Mukherjee, sir. 2012 budget. Finance Minister Pranab Mukherjee later became President of India. When in 2012, he reduced the limit from 20 to 10, insurance companies started raising an objection. Please understand. If government reduces the limit, the insurance companies that are charging between 10 and 20 can't charge. No? See, earlier insurance companies were charging you within limit of 20. But if government is reducing the limit, then they can't charge you more than 10. Because if they charge more than 10, you will not buy their policy. You will buy somebody else's policy. And if one company also reduces, competition is a very dangerous thing. If one company also reduces the premium amount to bring it below 10, then everyone will go to that company. In competition, all other companies will have to do it. So all insurance companies had to bring their premiums under 10%. Do you realize their incomes are suddenly falling by half? Because earlier they were charging 20, but now they can charge only 10. Otherwise, people will not buy their company ka policy, no. People will go to other companies, no, bro. So insurance industry objected. But then see, Pranab Mukherjee sir was from West Bengal. And my personal experience, I'm telling you, that once they decide something, they are not going to change it. They are very, very rigid, right? And whether you say right or no, it is my personal experience. I don't watch cricket usually, but if it is Mumbai Indians versus Kolkata Knight Riders, the fight is right inside the bedroom. And why the hell do they even come and play against Mumbai? You check the records, in 15 years, they have not won 5 matches also. And their owner is not allowed in our stadium also. Why do they even come and play? I don't understand. So Pranab Mukherjee sir, after so many requests also, refused to change this amendment. Insurance company said, sir, we are suffering losses. But he said, I will not change. He never took a step back. Never. He was known for this. He actually had to be removed from finance minister only because of this. Because other than this, in that 2012 budget, he introduced 2-3 more controversial things in which all industries were going to suffer losses. Government was going to make profits because he was stopping some leakage of revenue. But all the industries, gold market, for example, in 2012, after that budget was shut down for almost a month in protest. But he did not change that amendment. So then people requested, because Sonia ji was leading Congress party at that time, that please change him. Make somebody else the finance minister. So they had to remove him. Achha, by the way, he was prime minister candidate. He was more appropriate compared to Dr. Manmohan Singh. Dr. Manmohan Singh, best finance minister ever. But just because you are best finance minister, excellent RBI governor, does not mean that you can become a good prime minister also. So with due respect to his contribution to the economy, he was not a good prime minister. Pranab Mukherjee was more deserving. But Sonia ji also was aware that he is not going to listen to him. Dr. Manmohan Singh will follow my instructions. He won't follow. So she did not let him become the finance minister. He did not let him become the prime minister. First, she gave him defense from 2004 to 2009. And in 2009, after they won again, she made him finance minister. But after 3 years, because of this controversy, he was removed. And such was his stature, such was his respect in politics, that to remove him from finance ministry, the only option left was to make him president. Because it was not easy to remove a leader like him. It is only because of, believe me, Pranab Mukherjee sir, that actually Modi ji could implement abrogation of Article 370. Those who have seen the movie will probably be aware that president ka signature is required. Without that, they cannot introduce the bill only. मतलब the bill cannot become act. J&K reorganization का bill which they had to introduce. So the chronology, of course, movie में थोड़ा melodrama they show that Modi ji went in a single car alone in the middle of the night to the president ka house to take his signature. It may or may not have happened that way, but president supported that, despite being from some other political party. Excellent guy, but only one negative point, that he never believed in taking a step back. So insurance industry requested, sir, please restore 20%, otherwise we will suffer losses. He said no. Then insurance companies gave a second option to him. Sir, okay, sir, please don't do that. Next best option. You understand? Next best. Yellow rose. Next best option, yellow rose. Insurance companies requested, abhi bhi nahi samjhe. When someone says, please accept my red rose, if not, at least my next best option, yellow rose. I know you are CA students. In your case, you offer red rose, you don't have to give the option. In return, you get yellow. Bro, some don't get yellows. Chal chhod. Okay. I don't want to go in that direction and unnecessarily, you'll go in that zone. Half an hour you'll think I'll be doing 2 extra sections here. Does not make sense. Come back to the provision here. Insurance companies gave Pranab Mukherjee sir the next best option. Sir, there are some people who are disabled, handicapped. It can be physical or mental. First of all, general knowledge, people who suffer from disability have lower life expectancy. They die faster than others. Sir, disabled people are also buying policies from our companies by paying 10% premium. But in these cases, we will get premium for lesser number of years because they will die faster than the others. At least for them, let us charge a little extra. Please, sir, at least this much you understand. Chalo, normal policies, you are keeping 20 ka 10 forever. But at least disability ka, you let us charge a little higher. And thus, Pranab Mukherjee, sir, accepted this. He was not going to change this. He accepted this in the next budget. So now, whatever will happen, unlike auntie brings amendments anytime during the year. Pranab Mukherjee, sir, at least waited for the next budget. In the next budget in 2013, he says from now onwards, any new policy taken on or after 1st April 13, any new issue of policy. So whatever is already issued, the earlier limit of 20 and 10 will apply. But for new policies from 13-14, and the policy that is issued for someone who is disabled, for someone who is handicapped, disabled, I hereby enhance the limit from 10% to 15% of sum assured. Rest of it is same. So if it is within the limit, death, maturity both exempt. Beyond the limit, so death still exempt, maturity taxable. Rest of it is same. Just that there are totally 3 limits for disabled people. For disabled, okay. Disability can be physical or mental. It can be any kind of disability. For any person who is suffering from disability, there will be 3 limits. For any policy taken up to 11-12, for them also it was 20. There was no distinction. They were treated at par with normal people. So policy till 11-12, which matures today, which limit you will apply? 20. Be very careful. This is the toughest of all. Any policy taken in that one particular year, 12-13. 12-13 is the only year that you have to focus on. For everyone, it was 10%. For disabled or normal, 10%. From 13-14, normal people will remain in 10%. But disabled people ka limit is now changing to 15 for new policies. Today you go and buy a new policy. Normal people limit 10, disabled people 13, 15. Till 11-12, everyone had same limit, 20%. In 12-13, that 1 year, it was 10 for everyone. From 13-14, normal people 10, disabled people. So for normal people, there are only 2%. Normal people like you, only 2%. Till 11-12, 20. From 12-13, 10. And from 13-14, 10 only. And for me, two limits are only existing. Whatever you talk about me behind my back after every class, क्या पागल है नहीं. And mental is also covered up. But you saying it is not going to increase my percentage. Just in case you are not aware of this, if you are disabled also, you get higher benefit. You have to prove that you are disabled. And for that, you get something called disability certificates. Temporary disability certificate, permanent disability certificate. There are other benefits also. There are so many places where they have handicap quota. Railways may you get reservation, concession. Admissions in institutions, you get preference under the handicap quota. And you get tax benefit. Later in your syllabus, there is a chapter deductions under chapter 6. I have told you about it. From gross total income, we get deductions. There is a section 80U, which says any person who is suffering from disability will get a deduction. Normally, if you are normally disabled from 40% to 79% disability, the doctor will write in the certificate. So you get a deduction of 75,000 rupees. And if you are severely disabled, that is 80% and above, doctor will write in the certificate, this person is 100% blind, this person is 90% blind, something like that. If your disability is 80 and above, so we call you severely disabled, you will get a deduction of 1,25,000. Normal disability, it is 75,000 tax benefit. Severe disability, it is 1,25,000. That means, can I say disabled people get higher percentage here plus 80U deduction? So just imagine, I belong to the Marwadi community. If I know that if you are pagal, mad, disabled, you get tax benefit. So I will go to my assessing officer and I'll tell him, hey, oh, मैं तो पागल See, I belong to the Marwadi community. I have got no ego when it comes to monetary matters. If calling myself mad, pagal brings tax benefit, I will happily do that. No ego in monetary matters. But you have to prove. मतलब you need to be intelligent enough to prove yourself as pagal. Irony देखो. You have to be intelligent enough to prove that you are pagal. For this, we get disability certificates. I also have a practicing CA form. Major part of the work, of course, ma'am handles because she is the practicing CA. I spend very little time in that form. But of course, with my contacts, students, parents, etc., whoever is looking for CA related services, whoever is desirous of changing their CA because they are sick and tired of the services, never on time, etc. So I generate the revenue for the firm. So anybody desirous of making disability certificate, I already listed the number of benefits that are available. You can take my visiting card after class. And by the way, it is not covered in class admission. Just in case you are like, yes, sir, we enroll for the class, so disability certificate is not free. No, I will charge less. But I will charge. See, I will charge less means I will charge. Huge range of, bro, forget that. If you want another level of tax benefit, now you know death cases, insurance money is exempt. Okay, do one thing, take some 5-10 crore ka policy in your name. And I will arrange for your death certificate. But yes, but your identity will be eliminated from all records. With that death certificate being registered with the local authority, municipal corporation, it will be mentioned that this Aadhaar number has expired. So from bank accounts, from mobile numbers, from property documents, from everywhere, you will be discussed or considered as deceased. Take that 5-10 crore. Of course, your nominee has to be somebody who is your family member. And then henceforth, you will live the life on the papers of your nominee. You want that insurance benefit? Of course, you will say no. I'll tell you the reason. For taking 5 crore ka policy, you'll have to probably pay 2-3 lakh premium, no? So I know why that no. But in case anybody wants, we do that also. The police part of anybody has a policeman in their family member? Policeman, any family member? Please tell me if Sure, you will be responsible. नहीं? Just because he's Zadav, matlab it is compulsory that he has to. Bro, don't typecast. I would have given him a tight slap if I were in your place. क्या? Last lecture. अच्छा. You can do it in front of me and close my eyes. Fantastic. By the way, just in case वो police में, you know, no, your brother supplies drugs. You don't know. Go and confirm. In every batch, no? In every batch, you know, just like now forever he will be stay within your limits. He will be that cute boy. ऐसे, there will be one, in my example, then there will be one drug supplier, then permanently that person will be considered as drug supplier in all the examples. So poor guy on a particular day, he asked some stupid question. And are you high on drugs? From that day, the whole class started calling him drug supplier. So in case you have police connections, first, no, he is giving exam, right? Okay, fantastic. So ladies and gentlemen, disabled people will get lots of tax benefit. Couple of them in front of you right now. But for that, you will need disability certificate. Only then you can claim higher benefit. ATU we will discuss when we come up to chapter 6 ka deductions chapter. For now, focus on the premium limit. Normal people till 11, 12, 20%. From 12, 13, 10%. Disabled people till 11, 12, 20. In 12, 13, 10. From 13, 14, we have to see the date of issue of policy, not today's date. Is that clear? Now, before auntie, this section used to get over here. Before auntie. Now, auntie noticed one defect here in the maturity cases. Death cases were exempt, are exempt, will always remain exempt. Government does not want to create an environment in the country where somebody has died and they want tax money. They want tax on the insurance money. So death cases will remain exempt, despite all the other amendments also that I am now going to cover. Death cases will remain exempt. So focus on the maturity cases. In maturity cases also they are ready to give you exemption provided your premium is within the limit. And there is a problem here that all the premiums here are in a percentage limit. So let's talk about today's new policies. Forget the old policies. Let's talk about a new policy. And let's talk about normal people. By the way, disabled people, new policy, we know it is 50. But normal people, what is the percentage? So for 5 lakh policy, limit is 50,000. And if I take a 50 lakh policy, though, normal people, new policy, only that much we are discussing. What will be the maximum premium allowed? 5 lakh. 5 lakhs. Some people have budget of paying premium of 50,000 in a year. But there are people who have the budget of paying 5 lakh also in a year. For better safeguard. Supposingly, I want a 5 crore policy. So what is the maximum premium I can pay? 50 lakh. And I have the budget of that also. Is that possible? Auntie observed one thing, that people who are high net worth individuals, who have more disposable money with them, unused money with them, they don't know where to make investments. So they are taking extremely high value insurance policies by paying extremely high premiums, which are within the percentage limit. And because they are within percentage limit, so whether death or maturity, they are going to remain exempt. I can't do anything. Once they are within limit, maturity will also be exempt. So death cases you ignore from your mind for the time being, because she was never interested in taxing death cases. Death cases were exempt, are exempt, will remain exempt. Only focus on the maturity part. So it is this policy holder only who is going to get this huge amount on maturity. Policy holder is only getting that huge amount on maturity. No. He is paying massive premium, which is within percentage limit. Because the only limit that existed was percentage. Earlier 20, then 10, then now 10 or 15. But in rupees, there was no limit. Do you realize that? Auntie has now also introduced rupees limit. Your premium may be within the percentage given. But in amount, in rupee terms, if it is exceeding the threshold that she is going to prescribe here, I'll tell you that amount. So that also will be considered as premium more than limit. So since that day when auntie brought this change, I'll tell you the dates also, because one thing I've already told you, insurance amendments will always be prospective. So existing policies, there will be only percentage limit. But new policies after the date that I am going to write will have two limits. Percentage limit. Percentage limit is not abolished. That is going to exist. Plus rupees limit. It has to be within both limits. So maturity cases will be exempt if premium is within limit. Existing policies, percentage limit. New policies, percentage and rupees limit. Did you understand the amendment here? Everyone? हाँ तो ladies and gentlemen, for maturity cases, what is the rule made by auntie? But before I tell you the rule, the rupees, the date, first be clear that whatever rupee limit also she has brought, it is for maturity cases, maturity cases, maturity cases, death cases. You observe the chart here. I am doing everything under maturity. So the death cases will always remain exempt. Whatever rupee limit she has brought for maturity proceeds of insurance policies. Two amendments she brought. One amendment she brought on or after 1st February 21. So historically, traditionally, the system was anything introduced in the budget on 1st Feb will be applicable from 1st April. Pranab Mukherjee sir brought 10% in 2012 ka budget, but applicability was from 1st April. Budget came in Feb, applicability is April. Then that handicap ka 15%, he brought in February, but applicable date is April. But auntie is a rare case on the planet where she wants to bring random amendments. So this amendment, she said, will be effective immediately on the budget date itself. On or after 1st February 21, if you have purchased special policies called ULIP, they call it Unit Linked Insurance Plan. Sir, what is ULIP? ULIP is basically a special policy which has combination of investment and insurance. You will pay premium to your company, matlab insurance company. With your premium money, insurance company will make investment in equity market. And the maturity money that you will get will depend on the performance of the equity market. So normal policies mein maturity value is fixed. That I am not discussing only. Our focus is maturity. Normal policies maturity is fixed. In ULIP, the company says if the equity markets perform better, so we will give you this fixed plus that extra bonus. They have to keep on bringing innovative products so that people don't buy competitor policies, they buy our policies. So they gave this offer, that fixed guaranteed amount plus if the market goes up, the extra amount. But market can go down also, no problem, but we'll give you the guaranteed amount. That means if you buy our policy, we'll give you this guarantee. Market goes down, this is fixed. Market goes up, we will give you extra. That is called unit link insurance plan. Double benefit. And the maturity value will strictly be dependent upon performance of the market. Iska pura ka pura full tax treatment is a part of CA final syllabus. This complicated thing called ULIP, they have not kept in inter ka syllabus, but for your knowledge, because if you ever happen to go and read section 1010D in the Income Tax Act, you will get this amendment. I know you are not going to, but in case you do, you will get this amendment. It is important for me to tell you. It is not a part of your syllabus, so I will not discuss. So come back to the original discussion. Maturity cases, till now the limit is percentage, 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 percentage. Inter students, I had to teach only that much. This amendment came in 21 ka budget. So I have been teaching this to CA final ka student. Inter students I was not supposed to teach. But then, last budget, 2023 ka budget, which was applicable for May 24, November 24, which later became Jan 25, of course. Auntie brought one more amendment. She said, on or after 1st April 23. So thankfully, the budget was in Feb, but she brought the amendment from. So by the way, this part you can cancel also for inter. So all the amendments for you are 1st April, 1st April. If you have taken on or after 1st April 23 a new policy, so one thing be clear, your existing policy taken till 31st March 23 will be unaffected with this amendment. So existing policy, there is no limit, correct? Rubbish! Percentage limit 20, 10 or 15. But new policies, only rupees limit. No, percentage and rupees limit. Understood? Existing policies will continue within the percentage limit. New policies, percentage plus. So any new policy that you have taken, which will be excluding ULIP. Sir, why excluding ULIP here? Because ULIP was covered in that separate amendment. Just orally, I am telling you, not in writing. In ULIP, they said if the policy ka premium is more than 2,50,000, it will become taxable. Even if it is within 20, 10 or 15. For new policies after this date. So what is the rupee limit for ULIP? 2,50,000. But that you don't have to study. So I will tell you for non-ULIP policies, which is an amendment on or after 1st April 23. Any new policy excluding ULIP. And obviously term insurance won't be covered here. Because term insurance means there is no maturity. There is only death benefit. Death benefit was exempt, is exempt, will remain exempt. We are only talking about maturity. I'll mention this so that for your record purpose also you have. If any policy is term policy has only death benefit. Term policy does not have maturity benefit. And in case tax will come only on the maturity benefit. Is that clear? Fantastic. On or after 1st April 23. So today if you buy a new policy, do you have to comply with percentage? Normal people 10%, handicap people 15%. Obviously new policies 20 can't apply. It will be 10 or 15 plus the maturity will be taxable. And mitro, maturity will be taxable. Death not taxable. Maturity will be taxable if your annual premium exceeds rupees 5 lakh. If your annual premium exceeds rupees 5 lakh. So now your premium has to be within 10 or 15 for new policies. Existing policies, it has to be only within 10 or 15 or 20 also if taken earlier. New policy, it has to be within 10, 15 and also within 5 lakh. And notice carefully, is equal to 20, equal to 10, equal to 15 allowed? Yes. And likewise equal to 5 lakh is also allowed. It will become taxable only if more than 5 lakh. That means listen, only maturity cases. Death cases will remain exempt. Only new policies. Existing policies will have only percentage limit. And the premium can be maximum equal to 5 lakh. If it is more than 5 lakh, it will become taxable. Taxable if the annual premium is exceeding rupees 5 lakh. Is that clear? So now we have percentage limit on new policies, percentage limit as well as rupees limit. Is that clear? Okay. This is very easy. You know, if I have to give you some examples also, I can very easily give you. But other than this, now you have understood that we have percentage and rupees, and we also know that rupees limit is now 5 lakh on new policies for maturity cases. There is one more line which Auntie has written. You may not understand it immediately, but don't worry, I will do some examples. Auntie also said, if you have multiple policies, then I will allow you to take exemption on any combo of policies. Where aggregate premium is within limit. Any combo of policies where aggregate premium is within the limit. Ignore what we have written in bracket for the time. Only focus on this much. Have you understood this part? More than 5 lakh? Taxable. If the premium is more than 5 lakh, even if it is within percentage limit. So first I will do some examples on this part, and then within the examples that bracket wala part will also become clear. But last part, these examples after this 10, 10 will get over. So 20, 10, 15, and now rupees limit on new policies will be applicable. All this is only for maturity cases. Death cases will remain exempt. Everyone is clear about this? Fantastic. I am giving you date of issue of policy, because the whole game is on the date of issue. You don't have to see the date of maturity, you have to see the date of issue. I am giving you the sum assured, can we call it the policy value, the guaranteed amount. I am giving you the premium that we are paying, which has to be within the limit, percentage, rupees, whatever limit you want to apply, and you have to tell me whether the maturity is going to be taxable or exempt. You have to tell me whether the maturity is taxable or exempt. Fantastic. First, on 1st April 22, I have taken a 2 crore policy where I have paid premium of 10 lakh. This policy is a term insurance policy. My answer will be maturity not applicable, because term insurance gives me only death benefit, and death benefit is going to remain exempt. You have to be clear that whatever discussion we are doing only for maturity cases, and term insurance does not have maturity value. Okay, next. On 31st March 23, I take a policy of 100 crore and my premium is 9 crore. And this is maturity case. Taxable or exempt? 5 lakh का limit है. Taxable or exempt? Exempt, because that 5 lakh ka limit came from 1st April 23. Do you understand who is our target? Those who are taking such high value policies. And that means like literally getting 100 crore rupees from the insurance company on maturity. And is that premium within the percentage limit? Therefore, taking exemption of 100 crores. Bro, that is too big. So now we are also introducing rupees limit. Understood or no? Fantastic. Why was this exempt? Because this came before the amendment. See, maturity money you will receive in 24-25. In 24-25, you have received maturity. So that is after 23. No, bro, we will not see the date of receiving money. We will see the date of paying our first premium. Date of issue of the policy. Correct? Chalo. Still that existing date. Now you must be thinking, sir, existing date, so it is exempt only. No, 5 lakh limit is not applicable. Correct. Taxable or exempt? Array, existing date. Even when 5 lakh limit was not in existence, 10% was there, no? So taxable. Fantastic. 1st April 23. 100 crore. 9 crore. Within 10%. Now this will become taxable. Why, sir? Because now on a new policy, we have percentage limit. It is within the limit. But also rupees ka limit, 5 lakh ka limit. Understood? Chalo. 1st April 23. 60 lakh. 6 lakh. Taxable? Sir, equal to 10% is allowed. It does not have to be less than. It can be equal to. Equal to is allowed. But rupee limit is crossed. Okay, fantastic. We live in a country called India. We don't want to learn the law. Indian tendency. Sir, if this is the law and I do this, so can I escape tax? I'll show you how. Because this was becoming taxable, idea. 1st April 23, I took two policies. Policy A, 40 lakh. First question. Are both of them within 10%? Yes. And individually, are they within 5 lakh limit also? Yes. So 10% limit is fulfilled. That is always going to be on a policy basis. And individually, that 5 lakh threshold is also fulfilled. So whenever you are, supposed to exceed 5 lakh rupees, just split your premium into or policy into multiple small policies. Good idea. Now, we can't allow this. But at the same time, we cannot prohibit it also altogether. So for these people, auntie wrote what she wrote in the bracket. She said, when you are taking multiple policies, I will first of all not grant you exemption of this. Otherwise, these people will only convert into this. But at the same time, I don't want you to pay tax on the full amount. Do one thing, make combo, make your own combo. Any combo of policies where your aggregate premium is within the limit. For example, if I take only policy A exempt, is it within 10%? And within 5 lakh, I can take policy A exempt. If I take only policy B exempt, is it within? Matlab A mein I am ready to pay tax. Is it within 10% and 5 lakh? Yes, so I can take them. Individually, I can take anyone. But if I decide to take both, I will not be allowed. Even if it is within 10%. Because the aggregate premium is exceeding 5 lakh. So option is yours. A plus B ka option is not available. Between A and B, which exemption you find better? Matlab, it is like me asking you, it is better to take exemption of 40 lakh or 20 lakh. So this you can take exemption and this you pay tax. Now read the para. Take exemption on any combo of policies where aggregate premium is within the limit. I'll do a bigger example. Now you understood. Those who were splitting their 6 lakh into different amounts. We are not taxing completely also and we are not exempting completely. You can keep on adding your policies in such a way that the aggregate is not exceeding 5 lakh. Okay. Take another example. Policy name A, B, C, D, E. Policy value 50 lakh, 35 lakh, 25 lakh, 15 lakh, 10 lakh. Premium 5, 3.5, 2.5, 1.5, 1 lakh. And we have to decide which combo we will take as exemption. First of all, percentage wise, all of them are within the limit. Supposingly, in this, any policy was percentage wise more than the limit, then we would have said taxable and finished it. Supposingly, any of the policies is term insurance, then irrespective, it is going to be exempt. That won't come in the discussion. So we are assuming that all are normal policies, non-ULIP, non-term insurance. And we are receiving money not on death, because if we receive on death, it will be exempt. And maturity. So maturity may we have to stay within limits. Percentage wise, all of them are within the limit. Rupee wise, some of them are within the limits. Some of them are not. You agree? One thing is for sure, I can't take the total exemption because aggregate premium is exceeding the limit. So what is mine? What are my options? My options are, if I take policy A, have I reached the threshold of 5? Come on. So I'll get exemption of only 50 lakh policy A. I can't make a combo here. Okay, option 2. With A, I can't add anything. With B, can I add A? No. I'm making combos, permutation. With B, can I take C? No, because the total is becoming 6 lakh. With B, can I take D? So B plus D is my option. But in that combo, can I add E? No. Okay, next. With B, can I take E also? B ka combos are not yet over. B plus E. Yes, because the total is 4.5. Now come to C. With C, I can't take A. I can't take B. But I can certainly take C plus D. Plus E also. Okay. Fantastic. With D, A is not possible. B I have already made. C I have already taken. And D plus E does not make sense because C plus D plus E is obviously the higher, better option. And with E also, if you see, A can't be taken. B we have already taken. C plus E does not make sense because C, D, E together we have taken. So these are the only possible combos where my aggregate premium is up to 5 lakh. Now you check in this option how much exemption you are getting. Exemption of 50 lakh, no. Premium is 5 lakh. I am getting 50 lakh ka exemption. In this option, how much exemption I am getting? 40 lakh? 40 hai na? In this, how much I am getting? Here also. Acha, B plus D is also 50. B plus E mein how much I am getting? 45 lakh. And this also 50. So this is 50. This is 50. This is 45. you can take any one of them as exempt. Any one combo as exempt. Supposingly I take this as exempt, so all other policies taxable. Supposingly I take this as exempt, I'll definitely not take this, but B plus D I can take. So then A, C, E I will pay tax, or I can take this also. Then A and B I will pay tax, or I can take only A ka exemption and pay tax on the remaining. Assuming that they are all maturity cases. If they were death cases, they will not come in the limit. If they were term insurance, there is no maturity. I can make a combo of my choice. Now read the paragraph again. Understood? Everyone? Fantastic. Ladies and gentlemen, that was your section 1010D. Death cases always exempt, and maturity cases you stay within your YOHO premium. Earlier percentage, now percentage as well as rupees. Everyone is clear? Excellent. After 1010D, we have already completed 1050. So let's go ahead. Section, we are still in exempt income chapter. Huh? Section 1016. One more good piece of knowledge you are going to take home. More than exam, for knowledge, if you ever receive something called an educational scholarship to meet the cost of education. What is a scholarship? A bright student who cannot afford education. Somebody is giving scholarship. And believe me, that money need not be used only for paying fees. See, if the student has to go and study in some other city, so you will have to probably use that money for hostel also, for buying of study material also. Arey bro, traveling in a city like Mumbai, your place of residence and place of work are always going to be far. So traveling ke liye bhi you can use the money. In the hostel that you are living, maybe food charges are separate. Education is a complete package, not just the coaching part, but the books, the coaching, the traveling, the food, everything. Somebody will pay money to the student. The bright and deserving student unfortunately cannot afford money. That is scholarship. Who is receiving money? For the student, the scholarship money is going to be fully exempt. Any student who receives, meritorious student who receives educational scholarship, monetary figure also, is that an income? Okay. Expense. Is that an income? Yes, but government does not want tax and therefore it is exempt. See, if it was not income, why will we call it exempt or tax? We are calling it exempt, matlab it has to be income. Student does not have to pay tax. Any scholarship received, it is going to be fully exempt. ये clear है? Huge mistake in drafting of this section. They have left a big mistake here. Section is over. Identify the mistake. Not mentioned. So what? Anybody giving? Fully exempt. Yes, absolutely. Whoever gives you fully exempt. That is not a defect. When you say कोई भी दे सकता है, मतलब actually literally ऐसा नहीं है that कोई भी will give you. Relative, तो you know there is another chapter, income from other sources, which says anything that you receive from relative any which way is exempt from tax, whether it is scholarship or gift or anything. Correct. Fully exempt. क्या चाहिए offer? Point out the defect. That's not a defect. It's a tax benefit. I am asking you to find a defect. Offer. Not mentioned. Not mentioned. Irrespective. Disabled person also requires scholarship. You have to study. Whether you are normal or disabled, you have to study. Anything else you can find out. But I like the way you guys are innovating. That amount ka there is no limit, or who is giving there is no restriction, or what kind of education you are taking, no restriction. Agreed. But the defect is in the sense that the purpose of the section may not be achieved. Purpose is what? Meritorious students should not be paying tax on the money received. With whatever you are saying, sir, whoever is giving for education, so what is the problem? Sir, any amount, but giving for education, what is the problem? Sir, any education is still education. Problem is that sometimes the section ka logic only will not be fulfilled. That is the defect. What are those cases? Merit. Merit holder student means what? No age limit. It depends on education. No? Of education, like sir, there may be someone who does not have money for school education also. And then there may be some student who needs money for professional education. Age can be anything. Percentage of what? Nahin. Merit, you may be somebody getting 50% marks also. In CA, 50 is also good.
Scholarship amount.
Any amount. Already said.
Students
You are giving scholarships to people who can actually afford. So you can still give them. See, it is possible that a rich industrialist's son is still a 90% plus student. Impossible nahi. It is likely. So colleges, schools have norms that anybody who is scoring 95% in this particular subject or in aggregate, irrespective of background, this much we will give you as scholarship, whether you need it or not. As per norm, that is okay, as long as they are giving it to you for education. Offer I give, to fatafat answer comes. This is too easy to give an offer, otherwise I would have given. Irrespective. In any case, had it been taxable, it would have been taxable for parents. But this is not taxable only, no. This is exempt. Okay, last 10 seconds. Thank you. 9. I want to give offer and try. I thought someone is calling. 9. क्या है? What? I'll give you the answer. Student has received scholarship. Like whoever gave for whatever education, genuinely gave a scholarship. No tax manipulation income. Is that fully exempt? What do you think the student should do with this money? I gave you some examples at the beginning of the section itself. What should the student do with the money? Study. Pay the fees. Pay the fees. Buy the books. Then write all that. No. Student got a scholarship and never seen that money before. Wow, 5 lakh rupees. Invited friends. Chalo, Saturday. It is a Saturday. There's party on my mind. Oh bro, Saturday evenings, no. Very difficult to control yourself. Automatically, the feet. Saturday evening. Some magnetic power pulls you. The student spends that 5 lakh in one night in a Saturday evening party. Invites friends. Bolo. What do I order for you? I have so much money. And 5 lakh finished. Still exempt. It's a big loophole in the law. And of course, the other ideas which you people got, that if you want to do some tax evasion, you can receive money in the form of scholarship. But the evasion will happen because of this. If this is mentioned that you have to buy books or pay fees, So you can't do evasion. Actual evasion will happen because of this, because they have not mentioned anything. The law is silent about where this money has to be used, and a big defect, a big loophole with which government will suffer losses. Of course, one day when I become the finance minister of the country, very soon, it is a matter of time. Talks are going on. Announcement can come at any time. I will still complete your batch. Don't worry, I will still complete your batch. Commitment is commitment. Arey, rukna. I will bring about the amendment here and mention that it has to be used for education and related activity. Understood? हाँ बोलो.
So why would the scholarship goes to that issue?
Normally, institutes actually don't give the scholarship money directly to the students. Supposingly, people who do charity wala help also, no? They will ask the student, where do you have to pay the fee? Student says 2 lakh fees of school. Okay, give me the bank details of the school. Give me the fee receipt or that challan of the school which we will pay. We will directly pay to the institute. Ordinarily, even bank loans. I don't know whether you are aware, if you take a home loan, bank will not give you the money. Bank will give the money directly to the seller's account. Car, if you purchase, so the bank will directly give the loan money to the car company. Car company will say, this much we have received from the bank, remaining you pay as down payment, and then you keep on paying your EMIs. The money will generally not come in your hand. But in case it comes in your hand, then you spend one full night. And make sure you invite your brother also over there, because main stuff he is only going to do. Tell him that I have said hi. I'm all the students, I have this general habit that one day before their exams start, I do message them all the best from my personal number. I did message him also, like any other student, like everyone. And he actually did reply, thank you, sir. Meet you in CA final. So very, very positive. I like such students who are very, very confident. He's confident about two things. One, he will come in final. If he's saying meet you in CA final, so one, he is confident that he will come in final. And two, he is confident that he will take admission with me. So, I like him for two reasons. Now, so generally you will not see, because if given, so this misuse will take place. But of course, the law still has to prohibit it by mentioning. Is that clear? Fantastic. Section 10, 17. Daily allowance and constituency allowance received by MP, MLA. Very famously, popularly known as MP, MLA allowance. Daily allowance, constituency allowance. Tax part is very small. Background is big. First, we need to know, sir, what is MP, what is MLA. MP is member of parliament. MLA is member of legislative assembly. First thing, they are not government employees. If you have that confusion, let's eliminate that confusion first. They are not government employees. They are public representatives. They win election from a particular area. That area is called their constituency. For example, Varanasi is the Lok Sabha constituency of Mr. Narendra Modi. So he has fought elections from Varanasi. Or Gandhinagar is the Lok Sabha constituency of Mr. Amit Shah. Or Wayanad in Kerala is the Lok Sabha constituency. Earlier it was Rahul Gandhi. I think now it is his sister Priyanka Gandhi. Wayanad in Kerala. Kerala is the only place where Rahul Gandhi can actually think of winning elections. Am I right? I have seen the Malayali culture, the Kerala ka people very closely. Because first batch I took over there, no one knew me in Kerala. I had 40 students. Second batch onwards, I never taught below 150 in one batch. Never. And I used to go only for CA final batches. Inter ka I never went also over there. But almost on a daily basis, there will be at least one or two students from Kerala who are buying video lectures even. So like literally, first time I did not know the audience. So I asked, how many people want to see Rahul Gandhi as a Prime Minister? Believe me, 80% students raised their hands. I actually do this to understand the taste of the audience, understand my mental state. I took a batch for 17 days in Ahmedabad, and from Ahmedabad I directly went to Kerala. I got a call from that organization that we need someone urgently, sir. We will pay for your flight with extra luggage, everything. You directly come, sir. Don't go home, directly come. Good opportunity, and it was financially also very good opportunity. I actually went. Ahmedabad, mein you have to say Modi ji is the best. No one like him. And very first day I realized that in Kerala you have to be exactly opposite. In Kerala, when a child is born, he is taught two things: ABCD. Modi chor. Believe me, you have to agree with this. Nahi? Nahi? Do you disagree? Yeah. Communist Party and Congress Party have more seats. Yeah, right. Hai. BJP does not have a single seat in Kerala. In the recent state elections, I think, ke Lok Sabha they have state election. One seat, I think they got this thing. That also with immense difficulty, I must say. You know, these four states of South India and a couple of states in the northeast, like West Bengal, for example, mainly because West Bengal does not have Indians. They are Bangla. See, how can one vote for? You've seen Mamata Banerjee speaking ever? Dabba dabba kya? नहीं, or let me put it this way, Mamata Banerjee does not need makeup for Halloween. You understood the depth here? Hey, complain mat kar. She does not need makeup for Halloween. It's a fact. So these are those states which will never vote. Yeah, this is basically, a regional culture. So yes, when Amethi in Uttar Pradesh is the family seat of the Gandhis, like the Nehru Gandhi family always fought elections. Rajiv ji himself used to fight elections from that seat and always won that election. And Rahul Gandhi also won. But in 2019, he was sure that he will lose Amethi because Smriti Irani did really good work over there. So he fought from both seats, Uttar Pradesh as well as Kerala. Kerala is a very, very safe place for Congress party. And of course, he lost Amethi and won by him. Later, he was disqualified from there also because of some, I think, some complaint, some court case going on against him. Bro, hundreds of MPs and MLAs in our country have criminal cases against them, but the only MP who got suspended from parliament, whose membership was suspended, was Rahul Gandhi. Okay, matlab, I don't understand that when your competitor is so weak, then at least leave that competitor alone. In fact, if he comes to parliament, he is your brand ambassador. Because every time he speaks, people vote for you. It was a bad decision to get him suspended. I think they need more intelligent people with them to make them understand these basic things. Modi ji, if you're watching the video, and I know the Income Tax Act by heart also, I believe me, I will be a very good finance minister. And with the standards that are set in the current finance ministry, bro, you pick up anybody from the road also, know that person is a better finance minister. I am still a qualified chartered accountant and more than 40-50,000 chartered accountants have studied from me. Certainly do better than, itna low standard. So these people are members of parliament. If I talk about my area, I come from an area called South Mumbai. South Mumbai member of parliament, there is a gentleman called Mr. Arvind Sawant. This is his third term. He stays also nearby. Oh, Kingston Tower. You must be aware of that. You stay there. Kingston mein he stays. You know or you don't? Obviously. Arvind Sawant. And that way you understand, he has spent 10 years as member of parliament, third term. But there is not a single blame of corruption or allegation or nothing. Very, 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 very clean image. The only time when he came under controversy was that parliament canteen was food, over the parliament ka canteen ka food was not good. So they picked up the chef, 3-4 members of his political party Shiv Sena, and forced that food into the mouth of that chef. Because they said this is our style. The controversy took place because that chef was Muslim and he was fasting during Ramzan. And they forcefully put food inside his mouth because the food was not tasty. That was the only minor controversy and it went away with time. He said, we were not aware that he was a fasting. It was Ramzan and he was fasting. We were not aware of that. Our problem was that give us proper food. We are members of parliament and we don't take things easily. Very, very clean image. Member of parliament from South Mumbai. North Mumbai, member of parliament. CA Piyush Goyal, All India rank 2 at CA final. And single digit rank at all the 3 levels. CA Piyush Goyal, sir. AIR 2, CA final AIR 2. Very, very sharp guy. These people have been elected from that area. That area is called their constituency. Likewise, if we talk about MLAs, Member of Legislative Assembly, every state has its own set of MLAs. For example, in Maharashtra, we have 288 MLAs. So, my voter ID is my old house. That area is known as an area called Malabar Hill. So, from there is Member of Legislative Assembly. Supposedly, India's #1 real estate developer, there is a name called Mr. Mangalprabhat Lodha. He claims to be India's #1 real estate developer. Believe me, bro. I stay in a building constructed by him and every floor has leakage. Every floor, 1,50,000 per month rent I am paying. Every floor has leakage. 65 floor का building है. 24th floor में where is the water coming from? Which rain water is coming? From the house above you, water coming in your house. From your house, there is water going in the house below. People are fighting with each other, builder has no responsibility. And just a 5-year-old building. 5-6-year-old building maximum. Mr. Lodha is the member of Legislative Assembly from that area called Malabar. That is called an electoral constituency. If we talk about, I think, this part of the city, this is mine. This falls in which you may not be knowing. No? Too much of confusion. Recently, all of them have changed because of election. If we talk, let me talk about some more seats. There is a Mumbai ka seat called Mumbai Devi. The MLA from that place is a gentleman called Mr. Amin Patel. There is a seat called Kolaba. From there, we have Maharashtra Vidhan Sabha Speaker Mr. Rahul Narvekar. So these people are known as MPs and MLAs. They have won election. They are public representative. But when they have to sit down for decision making, they have to gather in the parliament. MPs will gather where? Delhi mein parliament. And MLAs will get collected, accumulated at a place called Legislative Assembly. In Hindi, we call it Vidhan Sabha. So Maharashtra Vidhan Sabha is in Mumbai. So do you realize that 552 MPs from the country gather at one place, Delhi, the parliament, every time the parliament is in session? See, parliament does not function 365 days. Parliament works for limited days. There is a budget session, there is a monsoon session, there is a winter session where they come together to take decisions of the country. Sir, where do they go rest of the year? They have to stay in their area where people have voted for them and do work for the people of their area. So when the parliament is in session, will they have to go and attend the parliament in Delhi? I am talking about MPs. Likewise, when the assembly is in session, do they have to come and attend the assembly in Mumbai? No matter which rural part of Maharashtra, they have won elections. In Mumbai Vidhan Sabha, I gave you some names from Mumbai MLAs. But then there is one seat at a place called Ratnagiri in Maharashtra also. There is one seat at a place called Sindhudurg in Maharashtra also. There is one seat at a place called Bid district of Maharashtra, Yavatmal district of Maharashtra. From everywhere people get elected. And they come and take state decisions where? In Mumbai. So do you realize one thing? When the parliament is in session or the assembly is in session, these MPs, these MLAs will have to go away from their house in that city and work. And whenever you are away from your house, your daily expenses will increase. Today, if I finish my lecture, I have to go home and eat my food. But when I used to go to Ahmedabad or Kerala or Andhra, wherever I have traveled, every evening I had to pay one restaurant of food ka charges. And I have the experience of eating alone at restaurants. That gives you more confidence than bloody hell anything in life. Shameless you become. Shameless. Like literally by the end of it, I used to go and tell the person who is, allocating tables, show me the smallest table. Any single person table with you? No. CA student, bro, forever single even after marriage. What confidence that gave me. So I had those expenses. But in Mumbai city, I don't have those extra expenses. So do you realize these people also, when they are away from home, they will have extra expenses? That is called daily allowance. They will get money from government funds to meet their daily expenses when they are away from home. That is known as daily allowance. You need to know the meaning of what is this. First, you need to know what is MP, what is MLA. You understood what is MP, MLA? The people for whom we vote. MPs are working in the parliament taking national decisions, and MLAs are working in the state assembly taking state decisions. Second, what is daily allowance? Whenever they are in session and they are away from home, so they will have daily expenses. For that, we give them money called daily allowance. Answer, what is constituency allowance? In all the explanation, have you understood that constituency is that place from where you have won election? So constituency is that place, that area where people have voted for you. ये correct है? So you will be given funds from the government to spend for people in your constituency. I'll give you some examples. Now next time, this also you will observe. As and when we learn this subject, no, you go outside the classroom and you see these things happening around you. And you'll be able to relate to them. Because we are going beyond the examination part. So next time you see a garden, outside a garden there will be a board. This garden has been beautified by the MP funds given by Mr. So-and-so. This area is under CCTV coverage by MLA funds given by Mr. So-and-so. There is a member of parliament, a Bhojpuri actor, Mr. Ravi Kishan. Ravi Kishan, Bhojpuri actor. You are aware of him? He is a superstar in Bhojpuri movies. Has worked in Bollywood also. He is member of parliament in Uttar Pradesh. I forgot the name of that place from where he has won elections. Earlier, Yogi ji was member of parliament from there, but then Yogi ji became CM. So Ravi Kishan was given that seat. In his area, he gave funds for a new crematorium for burning of bodies, air-conditioned crematorium, and they conducted a grand function. And Chief Minister Yogi ji was invited in that function, and everyone was supposed to give a speech on the inauguration of a crematorium. Now he is like, yes, sir, crematorium inauguration, what speech you give? He literally said it that this is air conditioned crematorium. Jalne mein maza hai. Believe me, he literally said it. यहाँ जलोगे स्वर्ग जाओगे. Direct. Believe me, he said it. You'll directly go to heaven. This money was given by the MP. Garden beautification, road construction. Supposingly the road is not proper in your area, you can actually request your area ka MLA to grant funds for construction of proper roads. They can give that from their constituency allowance, or they can approach the road ministry, or if it's a highway, they can approach that ministry to grant funds. They are given government funds for meeting their daily expense when the parliament is in session or the assembly is in session. That amount is called daily allowance, and they are given government funds to spend for people in their area. Where to spend, where not to spend, they will decide. Whether to grant the funds, not to grant the funds, they will decide. But that money given for development of their own area where they have won election is called constituency. Constituency means the place where you win election. So constituency allowance means money to spend for the people of that area. You understand the meaning of daily allowance and constituency allowance? All right, ladies and gentlemen, boys and girls. Fully exempt. Daily allowance and constituency allowance will be fully exempt. Bro, you want to find out defect here? No offer. No offer. Come on, when the same thing happens again, you can't be making the mistake. Like literally, there have been cases where MPs, where MLAs have taken funds and not used at all. Forget about misusing, not used at all. Kept the full money with themselves. Bro, what all you have to do? Papi pet, no? Kya kya you have to do, bro, to keep the class interested? Gentleman called Mr. Sachin Tendulkar was member of Parliament, Rajya Sabha. Are you aware of that? He never attended Parliament. Parliament was in session. He was in Mumbai Indians ka dugout, and he was. अबे bro, Parliament में who is going to question you? यहाँ पे you leave the dugout, so you are answerable to the Ambanis. You was immensely criticized. Later he said that I will surrender all the allowances that I have received. But he didn't surrender his lifetime pension as member of Parliament. Even after retirement, they get lifetime pension. That he has not surrendered. He surrendered whatever he was criticized for. Tendulkar, when he was in his peak, he purchased Ferrari. I think there were only two people who owned a Ferrari in our country at that time. He was only the second person to own a Ferrari. A problem was Ferrari, when you import, the custom duty was double of the car cost. So car cost into 3 becomes your total cost. Car cost plus double custom duty. If supposedly 1 crore ka car, to 2 crore custom duty. He actually made an application for waiver of custom duty. The privileged class. We are all humans. Nobody is God. How can human beings be God? In income tax, is in any case individual, he has to pay taxes. So these members of parliament, these MLAs, irrespective of where they use their funds, they are going to get full exemption. Is that clear? In respect of their daily allowance as well as their constituency. Meaning of MP MLA, clear? Meaning of daily allowance, constituency allowance, clear? And whether they use it or they don't use it, whether they use it correctly or misuse it, fully exempt. Fantastic. Section 10(17)(a). Any kind of award or reward that you receive from central government or state government for outstanding achievement in the field of sports, any artistic achievement in the field of art, you can say, literary achievement, scientific, scientist, scientific achievement, any award reward that you get with respect to achievement in these fields, fully exempt. These are known as civilian honors. Whenever you are an outstanding achiever in your field, government will grant you awards. Civilian honors in India fall in 4 categories. The lowest is Padma Shri, next is Padma Bhushan, third is Padma Vibhushan, and highest civilian honor of our country is Bharat Ratna. Highest civilian honor, Bharat Ratna. You are aware of this? You get that certificate and the president ka medal, that is okay. In sports, we have Arjuna Award, and above that, there is a Khel Ratna Award, which earlier was Rajiv Gandhi Khel Ratna. Now it is known as Major Dhyan Chand Khel Ratna Award. Army maybe there are honors. We'll talk about that. That is an upcoming point. Armed forces maybe there are awards like Mahavir Chakra, Paramveer Chakra, etc. We'll talk about that. But for now, our focus is civilian honors. So if you performed good in your field, you'll get these awards. Khel Ratna is an example, or Bharat Ratna, Padma Bhushan, Padma Vibhushan. Other than the medal and the certificate, do you know you get cash prize also in that? The cash prize received by you is going to be fully exempt. Just imagine government giving Bharat Ratna ka cash prize to you, and next day sending your notice, pay tax on this. So any amount received for the field of any of these fields, achievement in sports, achievement in arts. If you observe that earlier days, a lot of Bollywood guys have been given these awards like Padma Shri, Padma Bhushan, Padma Vibhushan. One thing that has changed in the last few years with the change in government is that you rarely will see a celebrity getting these awards. This government is actually on a mission to find unsung heroes. That there is someone who has cut a mountain into pieces to create a way. So they awarded him. There is somebody who is feeding poor people in village. They are searching for such people and granting them these awards. Irrespective of who you are, the money that you receive is going to be fully exempt. We are extremely proud of you. The money that you receive is going to be exempt. चलना यार. हाँ, तो ladies and gentlemen, these rewards, the cash prices associated with them are going to be fully exempt. Fantastic. Next. Section 10(18). If you have been member of, stop it yaar. Okay. If you have been member of armed forces. Sir, what do you mean by member of armed forces? This will cover Army, Navy, Air Force, of course. It will also cover your paramilitary forces. It will cover NSG commandos. Now this is 2008. I don't know how many of you all were there, and if you were there also, in what senses you were there. 2008 was probably the darkest time that Mumbai saw in terms of terrorist attack. NSG commandos actually came to save Mumbai. So there were these NSG commandos. A popular name amongst them, Major Sandeep Krishnan, who laid down his life to save Mumbai at that time. Yes, NSG commandos. In fact, I must tell you, police will also be covered. Police will also be covered. Armed forces will simply cover all of them. If you have been a recipient of bravery award. Now, right now we were talking about civilian honors, Padma Shri, Padma Bhushan, Vibhushan, Bharat Ratna. In the armed forces, the honors, at a lower level, they call it something called a gallantry award. That means wartime you performed well, or any combat, any fight you perform well. As it gets higher, there is something called Mahavir Chakra. There is something called highest armed forces honors. Are you aware? Mahavir Chakra, and then the highest is Paramvir Chakra. Highest armed forces honor, and Paramvir Chakra is always given posthumous. After death. Paramvir Chakra will be given only after death. I think your generation also probably knows this, because recently movie was made on Major Uri. Uri did not cover Paramvir Chakra. Sher Shah on the life of Captain Vikram Batra. In that movie only that song was there, no? Mera dola nahi aaya. Bro, I booked a cab, mera ola nahi aaya. Bad joke. Stop laughing at such bad jokes. Don't give me faltu encouragement. Otherwise, you don't know how dirty I can get. So laugh only when the joke is good. I think Sher Shah, that movie was famous for other songs also. It was that movie only, no? Any other song? Hey, काम धंधा. Hey. बस. The moment I ask, one by one people are guessing. ऐसा कभी you have guessed in the concepts? Captain Vikram Batra laid down his life. Highest armed forces on Paramvir Chakra given after death. Now, if you are receiver of bravery award, any kind of, it can be low level. See, for all kinds of bravery award, you don't have to die. Just a good performance also results in a bravery award. One day you will retire from armed forces. So after retirement, what are we going to give you? Government employees always get something called pension. And after death, there will be something called family pension. See, government employees ka system. How many were government employees ka family members? I have asked this before. And let me ask the departments again, because I told you I need a refresh of memory. RBI and where? Who? And RBI. Government employees take birth by to enjoy life. So go to office at 12 o'clock, then lunch break till 2 o'clock, then come home at 4 o'clock. After retirement, they get pension. And after death, family gets pension. And don't take it personally. Don't get offended. My grandmother is getting pension even today from Indian Railways. This I must have told you when I first time introduced pension. 1997, my grandfather expired. So this March, come month, 5th of March, he'll complete 28 years. And even today, my grandmother will turn 82 now in April. She is still getting pension from Indian Railways. That is family pension. See, the retiring employee money is called pension. But after retirement, the spouse will get money. No, that term is called family pension. Because spouse, they say family, but they give it only to spouse. After death of spouse, children are not going to get pension. So, money received by the spouse will be called family pension. So, after retirement, you will get pension. See, these people will get after retirement. But for these people, it will directly be family pension, if you now understand. So, till the time you are alive, you will get pension. After your death, and you also can die. No, see, today you retire from army. At the age of say 40, 45, 50, you retire from army. After that, you will get pension for some years. Then after a few years, you die naturally. But your family will get pension. Whether your pension or your family pension, fully exempt. Whether your pension or your family pension will be fully exempt. Is that understood? So, the family pension which my grandmother is getting from Indian Railways, that is fully rubbish. My grandfather did not work for army. Pagal log, wake up. Every exemption is not for all government employees. Hello. Exemption is for these people, and that also not armed forces ka all the members. Only those who. My grandfather did not receive any bravery award for marrying my grandmother. Bro, I must say, he had to be very brave. This I tell my grandmother on her face also. When you are the eldest, no, so you share special affection, so you can take the privilege of saying anything. The younger ones actually cannot. They are scared. But supposingly, my grandfather was very brave to tolerate my grandmother, but that applies to every Indian male. That applies to every male. But that bravery is not covered in tax exemption. Pagal log, all the government employees ka all pensions are not exempt. Only those government employees who were member of armed force. That much is also not enough. And received a bravery award. Exempt. So my grandmother's pension is taxable. Parents working or retired? Working. So after retirement, they will get pension. Taxable. Exemption is for armed forces, that also receiver of bravery award. Till the time they are alive, pension will be exempt, and after their death, family pension will be exempt. Bro, understood? Fantastic. Next. Section 10, 19. If you were member of armed forces. Now again, you know the meaning. Last time, what was the condition? This time you have died during your official duty. First of all, your own pension cannot come only. Because when you were on duty at that time only you laid down your life. So from day one, what will come? Is that clear? See, There is this is so easy, but people still get confused. Sir, here you have written both own pension and family pension. Why here only family pension? Because here you have died while on duty. You did not get to retire. You died while you were on duty. So from day one, which pension will come? Fully exempt. Do not get confused between the previous one and this one. They are two independent conditions, two independent clauses. If you receive bravery award during that combat, you have died or no, doesn't matter. You'll get your exemption. Dying is not compulsory. And supposingly you have laid down your life in that battle, whether you receive a bravery award or you do not receive a bravery, one bravery award cannot define. People like Mr. Vijay Salaskar or Mr. Ashok Kamte or Mr. Hemant Karkare or Sandeep Unnikrishnan, or have you heard of the name of Mr. Tukaram Omble? Because if you don't know these names, the shame is on you. It was a police constable of Mumbai, Mr. Tukaram Omble, who is responsible for catching the terrorist Ajmal Kasab live. Ajmal Kasab had AK-47 in his hand and he was continuously firing. This police constable he held the gun in his hand and he is continuously taking bullets on himself, but he did not leave the gun. Finally, he snatched the gun. His other colleagues went and caught hold of the terrorist and he collapsed. Obviously, with so many bullets, you had to collapse. In Mumbai, there is a place called Girgaon Chowpatty. Right at that junction, and even today we have a statue of Mr. Tukaram Omble over there. Had it not been for Mr. Tukaram Omble, we would have never captured that terrorist alive, because all other terrorists were killed. He was the only alive terrorist caught. And we would have never come to know the story behind the worst attack on Mumbai ever. Only and only he is responsible. See, we may have given him some bravery awards, we have installed his statue, but his sacrifice is not dependent on any bravery award. He laid down his life. Now, whether you award him or you don't award him, his family will be getting pension fully exempt. Fully exempt. You understood? So there are two separate things. If you receive award, dying is not compulsory. If you have died, receiving award is not compulsory. Any one of the two cases. But yes, there is one difference. When you receive award and you are alive, there can be pension also and family pension also after your death. But if you have died, there will be from day one only family pension. It is going to be exempt. So if you have died during official duty, then from day one your family will get pension. It will be fully exempt. My grandfather was working for Indian Railways. He had retired, but if I change the example, supposingly he was in office when he got his heart attack. Those days government employees used to retire at about 55, 56, 57. So he had just retired a couple of years ago. But supposingly he was in office. He passed away very peacefully, naturally. Heart attack at a very young age. So imagine he is in office on official duty and he died during official duty. So from day one, my grandmother will get pension and that family pension will be fully taxable because he was not a member of armed forces. Please understand, the exemption is being granted to members of armed forces. Kindly do not make this mistake now. Are we clear? So, member of armed forces died during duty or receiver of bravery award, both cases own pension exempt or family pension also exempt. And independent situations, they are not cumulative.
That person that in a coma.
So, you have not died.
Someone
Coma is not death, but they are not getting money. What will they get when the person is in coma? What is that person getting? We can discuss tax effect if you are receiving something. See, if family is not getting anything, today you come and ask me, okay, sir, that particular soldier died, but they did not give anything to the family. So what do I do? If they give something to the family, I can discuss tax treatment. But I can't tell the government that give 5 lakh, 50 lakh ka compensation. You understand? Normally, people who enter that coma state I think government does pay their at least that salary, but salary like any other income normally is taxable. That also they give or they don't. You never know. But yes, for getting exemption, you have to either get award or you have to die. ये clear है everyone? हाँ. Army man. Abhi, if you observe that way, last war that took place on 1999 Kargil. 1999 is 26 years ago. Bro, 1999 is 26, no. In 4 years, millennials will enter 30. No, Gen Z started at 98, no? Gen Z started in which year? 98 to 2006 is Gen Z, no? And then 2007 to 2014 is Gen Alpha. So Gen Z will actually become 30-year-old in the next 4 years. You all are Gen Z only. We are millennials. हाँ. अभी होगा तो होगा. What to do? Kargil का war 1999. You heard of any war that India has fought since you have started understanding things in your growing years? No. Just imagine somebody who is 22 years old joined the army in 1998. Today that person is 48 years old. In the next couple of years also there may or may not be a war. That person will retire without war. Just imagine. You still get pension. Fully taxable. If by chance you die, now that you have retired, you'll die natural death. Family will get pension. Taxable. Exemption is only if you receive award. Bro, there is no war. What will you receive award for? And obviously, you have not died during official duty. How can you die during official duty? Maximum what can happen, even if there is no war. Many a times in border areas, there are infiltrators. They have entered our border. There is cross-firing. Such kind of news keeps on coming. For example, an attack like Pulwama. That is died during official duty. That will come in this. But there cannot be a bravery award in cases like this. In case government gives, supposingly the combat was very, very difficult and you perform well, you get bravery award, or you die, you are eligible for tax benefit. If it is none of them, so you won't be getting any tax benefit. One of the two things has to take place. Clear? What do you want? Award nahi mila to it is going to be taxable. For exemption, either award or death. You fight war, but everyone who has fought a war will not get award. Bro, war के time पे there is somebody who is in the kitchen. I would have said some senior who is sitting in the office and making strategies, but you said kitchen. So fantastic. Border movie you have seen recently. So you don't get award. You need to get award for tax exemption, or you need to die for tax exemption. This is nothing, bro. I'll tell you about Pakistan. Created in 1947. Fought 1947 mein, there was that riot kind of a situation because people from both countries migrating. One war we fought in 1965, another we fought in 71, and third war we fought with Pakistan in 1999. They lost all the 3 wars. Bro, baap. Still, if you see Pakistan ka army ka generals, majors, they have so many medals on their uniform. Exactly for doing what is a big mystery, big question mark. Without doing anything, what kind of tax exemption? You understand? To get tax exemption, either you receive award or you die. At least one of the two things has to take place. Clear hai? Fantastic. Section 1026 triple A. Stretching kar raha hai. If you are a Sikkimese individual, Sikkim is a state in India. You know that? Northeast mein. People of Sikkim are Indians. But the following incomes of people of Sikkim will be fully exempt. Any income that you earn within the state of Sikkim means any income earned in Sikkim is going to be fully exempt. And outside Sikkim, if you earn any interest or dividend on securities, if you buy debentures, you will earn interest. If you buy shares, you will earn dividend. Both of them are going to be fully exempt. Interest and dividend on securities will be fully, ladies and gentlemen, fully exempt. Income of Sikkim is individual. Two types of income. Within Sikkim, everything. Outside Sikkim, interest and dividend on securities will be exempt. But fully exempt. Two incomes fully exempt. Or simply put, inside Sikkim, there is no income tax, if you understand. Section over. Shall I go ahead? Why? Why? Sir, if I have incorporated that habit inside you, then sir, we want to know the reason behind everything written in the law. Nothing is bigger than logic. Logic itself has maximum magic, bro. Sir, why? That's your question. No? Why is this benefit given? So, how many of us are aware that just like J and K, Sikkim also has special status in the Constitution of India? First of all, are we aware of that? In fact, J and K ka special status is abrogated. Sikkim ka nobody is talking about because Sikkim is not politically favorable. J&K mein, you know, it's a big political thing to be able to give special status to Kashmir one fine day if the government ends up securing POK back. And do you know a part of Kashmir is also with China? Akshay Chin we call it. And a part of Kashmir obviously is under the control of Pakistan. We call it Pakistan occupied Kashmir POK. Kashmir brings political benefit. Sikkim does not. Nobody is talking about it. When India became independent, India was not in its present structure. India was too many princely states. They were independently ruled by their respective rulers. It was the Iron Man of India, Sardar Vallabhbhai Patel, who actually one by one went and told all those rulers. Those days in Urdu they used to call it Riyasat. The rule. For example, I don't know whether I ever told you that Maharashtra and Gujarat were one zone called the Bombay Presidency. It was one state called Bombay. And then a state border was drawn on the basis of language. The Marathi speaking population were given a state called Maharashtra and the Gujarati speaking population were given a state called Gujarat, which was not at the time of independence. It happened as late as 13 years after independence, 1st May 1960. That is why 1st May is Maharashtra Day and Gujarat Day. Because Maharashtra and Gujarat both were created on the same day by drawing. States ka borders were drawn on the basis of language spoken. In the extreme south part of Maharashtra, ignore Goa because Goa in any case does not come in that longitude. There is a place called Belgaum and people from Karnataka call it Belagavi because that particular place has people who speak Kannada as well as Marathi. And there is always fight with respect to Belgaum. That Maharashtra always claims that Belgaum belongs to Maharashtra. Because of language. States, you should be aware, states of the country have been made on the basis of language. In Hindi, that term is called Bhasha Var Prant Rachna. On the basis of language, the states have been created. So, are we aware that Sikkim was never a part of independent India? It was only later where government of India told, because Sikkim, if you come under the umbrella of India, you will be protected because you have China on one side, you have Nepal on one side, you have Bhutan on the other side. If you stay alone, everyone will attack you. Under Indian control, you will be safe. Kashmir ka ruler Maharaja Hari Singh was given this option: join India. The ruler was Hindu, but major population of Kashmir was Muslim. So he was under confusion, India or Pakistan. He had the third option to stay independent. He chose to stay independent. But just when he was choosing to stay independent, Pakistan army actually attacked Kashmir. And then he signed the papers that Kashmir will be annexed, will be a part of India. That's the only way in which Kashmir can remain safe. But special status was granted at that time. So at the time of becoming a part of India, these princely states laid down conditions, and those conditions were incorporated by bringing special articles in the Constitution of India. Kashmir ka everyone knows. Non-Kashmiris will not be allowed to buy land, not own property, and those conditions actually forever became the reason behind Kashmir not, developing the way it should have. But that is abrogated. Now nobody is talking about Sikkim. Sikkim as an independent state did not have any income tax. It was like operating literally like an independent country. It later decided to become a part of India. So when it became a part of India, over there the ruler said, sir, we don't levy any income tax. But by that time, Income Tax Act was already enacted. Income Tax Act was a part of Indian law since 1922, but later that law was abolished and new Income Tax Act 1961 was created. Are you aware of this? So in 1961 India had income tax. Sikkim was not a part of India. So people of Sikkim said, sir, we become part of India, so you will start levying income tax. India said, don't worry. There will be no income tax on Sikkims. Achha, by the way, if Sikkim stays independent country and you earn income in India, that will be taxable. So maximum what you are not paying tax on Sikkim ka income. All right, then your Sikkim ka income will remain exempt income. And even today that is being honored. Income earned in the state of Sikkim will remain exempt. But Sikkim does not bring political benefit, therefore nobody talks about it. It is a special status granted to the state of Sikkim. And of course, as far as interest on dividend or securities are concerned, whatever income you earn, you will not be keeping in income form for a very long time. You will be making some kind of investment or the other. Within Sikkim, you invest in properties, etc. It will remain exempt. But outside of Sikkim, you may invest in equity or debentures. We will keep that also as exempt. But then this does not mean that, wow, sir, what a good idea. So I'll do one thing. I'll buy a property in Sikkim. I'll become Sikkimese. Once that happens, within Sikkim, everything will be exempt. But apart from that, all my equity investments, interest, dividend, all that will also become exempt. You have to be Sikkimese. Today, you can't become Sikkimese. Who is Sikkimese? When Sikkim was annexed in India, at that time, a register was made, the Sikkim Subject Act, and the names of people were written. If you are that person whose name is written and even today surviving, then you are Sikkimese. If you are a biological descendant, if you can prove that this person's name is written in Sikkim Subject Act, I am related to this person biologically. This person is my father. This person is my grandfather. This person is my brother. And that is where in media, you see those, social media, you see those jokes, kagas dikhao. You have to prove with papers that you are Sikkimese. If you are Sikkimese, you are eligible. If not, you are not going to be eligible. Are we clear on this? So ladies and gentlemen, boys and girls, that is your section 10, clause 26, triple A. Okay, we are almost done with the chapter. There is one more section, one more clause in section 10, and there is one section 10 double A, which is not an exemption, it is a deduction. And one thing we all know, that 10 and 10 double A are not same, that we have discussed yesterday. Are you correct here? All right, in 10 minutes you should be in your seats. 10 minutes time. Sharp 10 minutes. Welcome back after the break. I really feel sad for those who will be watching these recordings later, because they did not get any break. Pause and play. Simple. Experience hua hoga when you watch the recording. Fantastic. But recording mein one more thing, no. You take break whenever you want. Pause. Bol. You can decide. But the only problem with that is it does not bring discipline. Even final students get immature when it comes to that part. So inter के लिए तो learning from recorded lectures is absolutely not advisable. As a teacher, you take my advice. So CA final also, yes, the only pain is that you have to go to class very early in the morning because rest of the day you have articleship. But as a teacher, if you were to take my opinion, what I can do when I am live physically present, offline class is the best. There is no replacement. Next best option, if you are not in the same city, can be probably live online with multiple platforms now being available. Recording is very dangerous despite being one of the highest sellers of my subject. I say that. I always prefer to teach students when I am present in front of them, because when you give, your expressions, a lot can be understood with those expressions, whether you are following the things that I am speaking or no, whether, sometimes if I have a slip of tongue, I might have spoken the wrong amount, or like, वो 50 नहीं था, वो LI's life insurance वाला. It was 50, but I erroneously said 45. You immediately correct it. Expressions give a lot of things, and that interaction is required to make the learning effective. Okay, now break over. And I thought, some are like, sir, अच्छा, अच्छा. Yes, please. क्या? The benefit is given only by a special status to Sikkim. There is no special status to Maharashtra or Gujarat. The special status is given only to Sikkim, because Sikkim did not have income tax before being a part of India. ये clear है? हाँ. You wait back after class. I have to do some magajmari with you. Yes. Yes, please go ahead. That particular area which has voted for you. Yes. Yes. They are going to be given that money, then it is their decision where to spend that money. They only get the money. Then whether they spend or they don't spend, they spend it for the correct reasons or no, they still get the exemption, which is the loophole. Yes. Anyone can give scholarship, but the purpose is for paying for your education. And the loophole is that whether the students spend it for their education or they do not spend it for their education, they still avail the tax benefit. There is no, that is another big loophole, that unfortunately, in terms of percentage, in terms of rupees, they have not given any particular threshold. So supposingly today, now you have little idea of slab rates. Supposingly today your family may, your parents earning more than 10 lakh, so they are getting tax of 30%. Little idea about slabs I have given. Now if they receive more income, that will still be taxable at 30%. Idea, do one thing, whoever is your payer, if you share good relations, then tell your payer to give that money to you. For that you have to be a major. If you are a minor, you will not be eligible here. To give that money to you as scholarship. So money will come in your household, but you will be able to avail the exemption given here. Understood? Yes, go ahead. More of scholarship. Excellent. Excellent. Employee will be very happy here, because if he gets in the form of salary, he will have to pay tax. And if he is getting in the form of scholarship, he will save tax. But the question is, will the employer agree in paying it like that? Because the whole decision is of the payer, whether the payer is willing. In that other example also, I told you that tell your payer to give the money in the form of scholarship. If employer is cooperative, yes, this manipulation will take place. Yes, with so many organizations that I work for, not all of them pay me. Some pay in the account of my HUF, some pay in the account of MAM. We do divert funds in a way or the other so that we are able to plan some taxes. We call it evasion though. You understood? So yes, if the employer agrees, you can take less amount in the form of salary, as you rightly said, nominal amount in the form of salary, and major part in the form of scholarship for the children of the employee. Forget children of the employee. Why don't you do this? Tell the employee only is pursuing some higher education. Say the employee, CA, now that you all have joined this course, CA, no, you have to agree about one thing. I agree about the fact that mentally and physically, it's a very, very difficult course. I agree. I absolutely disagree with the statement that CA exams are easier than 10th and 12th. I agree, it's a very difficult course. But do you agree that you don't have to spend too much of money in CA course? In terms of financial expenditure, it's a very, very relaxing course. Go check the fees of courses like CPA, CMA, CFA. The one exam ka fees there is more than your total cost of becoming CA. ये तो ठीक है, this influencer, no, social media and influencer, don't do CA in 2024, do the following courses. Bro, I invite all those influencers for an open challenge. Open challenge. And I will prove it and bring your audience who support you. I will only make my point in a very, very healthy debate with proper respect to each other. Let your audience decide who is making more sense. Do CPA, CMA, bro, one exam, the cost is 2 lakh rupees. In 2 lakh total, you can become a CA. So don't compare. And then tell me one more thing. Where can that CPA or CMA sign and get paid for signatures? Naina. So, supposingly your company has a policy, Joel, your company has a policy that if you want the finance department of the company, you need to have an extra degree like MBA Finance or CFA, which are expensive courses. MBA is in good colleges. My brother did MBA, Indian School of Business. 1 year fees we paid 43 lakh rupees. 1 year ka MBA, 43 lakh rupees. You are an employee, but you want to pursue that education. Your employer is giving you that money in the form of scholarship. And you still get the exemption. No need to go right up to the children. You can directly receive the money as an employee yourself. The one who gives scholarship can choose anyone. Are we clear till here? Now then, there is one problem here. The problem is that why should the giver give? What is that giver's motivation in unnecessarily doing manipulation with you? Are you ready to share some portion with that giver in cash? Say supposingly 1 lakh check given to you as salary will be having tax of 30,000. But if that 1 lakh is given to you as scholarship, so are you saving 30,000? Are you ready to give it back to him in cash 15,000 so that some benefit you get, some benefit the payer gets? That's how we plan our taxes. Receive a check, return the cash so that both parties get some tax benefit. Why? Otherwise, why will the payer? What motivation payer has? You are saving taxes, no? What motivation payer has? If payer has some motivation, then only this can be given effect to. But yes, it is possible. Clear? That 20% is per annum. 20 into 20, 400 times. Yes. 4 times of the money that you are receiving. You will not get that money. You will not get that money. So when a company is approaching you with such a ridiculous policy, where you have to pay 20%, the tenure of the policy should not be more than 5 years. Think about it. Because in 5 years, the policy value will be the total premium that you have paid. 20 into 5 is 100%. No. So if the premium is actually 20, which used to be till 11, 12, then the tenure should not be more than 5 years. Do not agree. See, buying the policy or not buying the policy is your choice. No. When they are taking such a huge premium from you, refuse to buy that policy. I don't want this policy because the money that I get will be less than the money that I have paid. Taxation is neutral on this. They say if it is within the limit, it will be exempt. If it is more than limit, it will be taxable. But here, if we keep taxation aside for the time being, the question is, why are you buying a loss-making policy? You understood? So, you don't agree only to buy a policy like that. Understood? Alright. Ladies and gentlemen, let's go ahead. Last part of Section 10. Section 10, Clause 34. Sorry. Section 1034A. Profit of shareholder at the time of buyback of equity shares. First thing that you have to understand is what is this concept called buyback. Buyback is a part of your syllabus of accounts, audit and law because it's a part of Companies Act. At inter and it will come in final also. Buyback is basically reduction of paid up equity share capital. See, when the company was started, we needed funds. So we issued more and more shares to raise those funds. But the problem with more paid up capital is, you have done this chapter in, so you should know all this by the way. The problem is that if we have more paid up share capital, so every time we declare dividend, we have to give more money. Dividend is a percentage of paid up capital. Every time we give bonus, we have to give it to more people. When our paid up capital crosses a certain amount, a certain threshold, so audit ka regulations increase on us. Company audit was taught to you in law or audit? Law mein company audit was taught? No. So see, company audit is a part of Companies Act. It is either taught in audit or in law. In one of the two subjects, it is taught. Company audit. So in that you will learn that when the paid up share capital crosses a certain limit, then audit report becomes more complicated. Additional requirements are put. So basically company wants to reduce paid up capital. Now preference shares we can redeem, but equity shares we cannot redeem. We have to give the shareholder an offer that we are giving you this much money, kindly surrender your shares. This is optional. Shareholder can say no. And of course, there are additional conditions attached to it. For example, maximum 25% capital can be bought back. The total amount spent can be not more than 25% of your paid up capital and reserves. The debt equity ratio after buyback cannot be more than 2:1. CA hai bro. You studied all this? Accounts will teach you the entries of buyback. Company law will teach you these rules, these rules are written in Companies Act. Tax will teach you that finally if the shareholder agrees for buyback, so will the shareholder get some money? Share will get cancelled. Do you realize the issue price of the share for the shareholder is purchase price? And the buyback price for the shareholder is selling price. So the buyback price minus issue price is selling price minus purchase price, the capital gain of the shareholder. That capital gain, the profit of the shareholder at the time of buyback is going to be fully exempt. First, let us understand a numerical example on this. Supposingly, the share was issued at a price of 80 rupees. Face value was 10 and there was premium of 70. So what was the issue price? 80. Obviously, the company has to give a buyback offer higher than 80. You have common sense. If the company will offer 50, shareholder will not agree because shareholder has the option of saying no. So company gave a buyback offer of 100 rupees. So do you realize that the profit per share of the shareholder is 20, and with this we multiply by number of shares not held, because all shares are not bought back. The number of shares bought back. See, it is possible I have purchased 1000 shares, but in buyback I am surrendering only 500. So with this I multiply by the number of shares, not I hold how many shares, but how many I am surrendering. Do you realize this will become the total capital gain of the shareholder? This total capital gain is going to be fully exempt. Is this capital gain, you understand? This is selling price and this is purchase price, will be fully exempt. So accounts taught you what is buyback and the journal entry. Law and audit will teach you the rules, that maximum 25%, debt equity ratio, etc. Tax will teach you that whatever is the profit made by the shareholder does not have to pay tax. Profit of, now read the heading, no, profit of shareholder at the time of buyback is exempt. Ask your question. Why? Because there is a section 115 QA in income tax law. 115 QA. 1034A is the exemption for shareholder. What does 115 QA say? That at the time of buyback, whatever is the profit of the shareholder, do you understand this is the profit of the shareholder? Company has to pay a tax which is known as BBT, buyback tax, on profit of shareholder. Means on this profit, company will be paying tax. Profit who has earned? Listen to this carefully. Profit of shareholder will be taxable for the company, which is not income tax. It's a separate tax called buyback tax. So take, how do you calculate this? Take the profit of the shareholder that you have calculated above, multiply by 20%. What is the rate of buyback tax? 20%. In this, you will add a surcharge of 12% and you will add a cess of 4%. Supposingly the profit of the shareholder, this was 20 rupees, and let us say number of shares bought back are 5,000. So what is the total capital gain? 1 lakh. So what do you do? Take 1 lakh here, total profit of the shareholder, multiply by 20%. That's your, we call it basic tax, 20,000. Then add 12. 12 will not be calculated on this. 12 will be calculated on this 20. So 20,000 plus 12% of 20,000, that is 22,400. And on this total, you will add 4% cess, giving you 23,296 rupees. 23.296 is the net rate, if you understand. After adding surcharge and cess, the effective rate becomes 23.296. Who will pay this? Company has to pay this tax, and therefore, because the company has already paid tax, it is going to be exempt for shareholder. So, first, what is 1034A? Profit of shareholder will be exempt. Second, sir, why it is exempt? Because company has paid tax. If company has paid tax, then shareholder does not have to pay. Next question, sir, why company is paying tax? Because who is the person making the gain? See, uska answer we get, no? Why is it exempt for shareholder? Because company has paid tax. Once we get that answer, our next question is, why is company paying? Because company will have thousands and lakhs of shareholders. Every shareholder will make his or her gain. If income tax department has to run behind individual shareholder, it will be very difficult for them. So what we will do is, we will put our work ka responsibility on the company. It will be the duty of the company to sit and find out the gain of every shareholder. Just imagine, 10,000 shareholders have agreed for buyback. The only thing common in all of them is the buyback price. You realize the purchase price of all of them will be different. The number of shares of all of them will be different. That means capital gain of every shareholder will be different. Company will have to calculate capital gain of every shareholder. Total capital gain, on that total amount company has to pay tax. This will reduce the work burden of the income tax department. Income tax department does not have to go and calculate the gain of every individual shareholder. Bro, until few years ago, even dividend used to be taxed like that. In India, there used to be a tax called dividend distribution tax. So company was distributing dividend to shareholder. It was difficult for income tax department to run behind individual shareholders. And therefore, what income tax law used to say was, there used to be a tax, 115Q, called DDT, dividend distribution tax. company will pay tax on the entire dividend, and because company has paid tax, dividend for shareholder used to be exempt in section 1034, 115Q and 1034. But about 2-3 years ago, auntie again came and said, who is earning dividend? So who should pay tax? I hereby propose to abolish DDT. DDT was abolished. Since that day, companies are not paying tax. Shareholders are only paying tax on dividend by showing it as income from other sources. But before that, before DDT was abolished, yes, ladies and gentlemen, dividend income in our country used to be fully exempt from tax because company has already paid tax. So there were two taxes. On dividend, there was DDT. On buyback, there was BBT. Both are profits of shareholder. One is recurring income, revenue income. Other is capital profit, one-time profit. But both were taxable for the company and exempt for shareholder. 1034, 1034A. DDT was abolished. So 1034 gone. But BBT was not abolished. So 1034A is still there. Is that clear? Because the government does not want to run behind individual shareholders, they are making it taxable for the company. Everyone is clear? Now then, ladies and gentlemen, it's been 2-3 years since DDT is abolished. You know, very valid argument as a shareholder you can raise, or as a company you can raise. Sir, in dividend, who is the person earning income? Shareholder. So whom are we taking tax from? Now, shareholder. So in buyback also, it is the shareholder who is earning the profit, no? Then in buyback also take tax from the shareholder only. Correct? Alright, so ladies and gentlemen, with effect from 1st October 2024, BBT hereby stands abolished. Therefore, no BBT on company, which can I say simply means 115QA is deleted from the act, and no exemption for shareholder, which hereby means y'all are the last people in my career whom I am teaching 1034A or the associated section. Buyback tax is a chapter in CA final. So final ka students also I told them that you all are the last people whom I am teaching BBT. Next year onwards there is no chapter called BBT. It is abolished. Now your question is, sir, it is abolished in this budget. See, every time there is an amendment, I will be using. Arre, screen पे it is not visible. You are not even telling me. This is the amendment that has taken place with effect from 1st October 24. Buyback tax has been abolished. So from now onwards, companies will not be paying any tax on buyback, and therefore shareholder also has to pay tax. Exemption gone. What they did with DDT as a trial, they successfully managed it. Now they are doing the same thing for buyback also. And it makes sense also. Think about it. Who was earning dividend? Shareholder. So abolish DDT, take tax from shareholder. Likewise, who is earning this profit? Shareholder. Abolish buyback tax and take tax from the shareholder. Now the question is, sir, is this an amendment now? Every time there is an amendment, I am going to be using red blood ka color, so that in your notes also, as you turn your pages, the amendment is clearly visible in our PDFs also. And if you have seen the textbook that I have given you, if that is open also, no need to tell me the page number or anything. Just observe that page. On the page itself, you will see. Oh, page number kya? Page number 26. Oh, you don't have to do analysis. I don't need textbooks when I am teaching. Page number 26, if you observe, don't read a single letter on that page. Just look at the structure of that page. Is something catching your eyes? Every time there is an amendment, even in the black and white book, you will get it like this. Color book mein to we have multiple options. I have shown you my color book of final. No? Never? Seriously? India's first book which contains memes. You all know it's not meme. I've never shown you this book. This is something that I take maximum pride in. It is one of the highest selling books of the country. Chandan, tax. If we talk about what is HUF, what is AOP BOI, what is artificial juridical person, rebate surcharge, right now you don't know their meanings, so you may not understand what I am talking about. You know this guy? This guy is Rati Shankar Shukla. If you don't know this guy, you Google his name, Rati Shankar Shukla. If you don't know him, that means you're already missing something in life. Mirzapur. Okay. You know this lady? Forget what I have written. See what she has decided to do. Hand gesture. Pokal bamboo. And believe me, ladies and gentlemen, oh, you've seen this बाद में अभी time नहीं है. हाँ. Abhi, next chapter, double taxation avoidance agreement is not a part of your syllabus. But I discussed about this chapter when I was doing residential status, that you are resident of one country, income in another country. I discussed a little about this also. If I may take you to a very, very important chapter, profits and gains of business or profession. This is the biggest show off of my life, bro. You have got no idea how much energy and effort I have put in doing this. किधर है bro? हाँ, year. When you purchase an asset, but after depreciation. CID is back, by the way. They have come up with a new season on Sony Live. Abhi, you know this guy, Gaitonde? You don't know Gaitonde? Sacred Games, Netflix. Bro, all these chapters. It's a book made for CA final. Now see, if you see the CA final ka book, it has got some 40 chapters. There are 2-3 chapters which are directly due from ICAI study material. So all your topics, like for example, all the heads of income, clubbing, set of deduction, this is the inter portion actually. Plus, if we talk about this chapter, introduction, I have put tax rates in this chapter. Tax rates ka whole discussion I do in the first chapter itself. Then there are some of these other chapters also. I'll show you. Just a second, please. Everything is visible to you also. There are these chapters like TDS, advanced tax, interest, which are also on a rough basis part of CA Inter ka syllabus. While the book was made for CA final, if you understand the presentation of the book, heading will be in black color, data will be in blue color. If there is any example, I will write in pink color. Section number is green color. If there is any amendment, so first chapter there was no amendment except this change in taxation rate for new taxation regime. So amendment will be written in red color. So clearly it will be visible to people. Marketing nahi hai, but I'll be honest with you. While the book is made for CA final, the topics of CA Inter, full CA Inter ka syllabus is covered because final is Inter into 2. Everything from the Inter ka syllabus is also covered. Believe me, across the country there are thousands of Inter ka students who are buying this book for their division. I am not saying you buy it. Nahi, otherwise you'll say, sir, marketing mat karo. Ye book. I have seen some very funny. I respect them, but then what do I say? I see a person who is teaching direct tax at CA final. I see an Instagram reel who says, I have launched a new book, only 400 rupees. I request you to buy this book. You just think that you have purchased a pizza for sir. Sir does not want your pizza. I had yesterday night only. So I am not going to market my book by saying only 400 or only 600, only just think that you have purchased one pizza for. Sir does not want your pizza. If you think it is good for you, you buy it. Otherwise, no. For Inter, the 2 books that I make that are a part of your class enrollment, I have already given you one. Other will also come. But yes, there are people who do this because amendments very clearly visible. More importantly, when you learn from that, the kind of font that is used here, the kind of presentation in the book, it is very, very easy to follow, understand, and therefore thousands of students in the country are buying this. But when I do anything which is handwritten stuff, I make sure that I write amendments like this so that clearly on the face of the book it is visible that buyback tax is abolished. Sir, so from now onwards, no buyback tax. 1034A abolished. Sir, if it is abolished, then why you are teaching? You did not notice one thing, that the date when they abolished it is this. Now, please understand, your exam ka previous year is 24-25, which started on 1st April, which will end on 31st March. You are supposed to know the law of the entire year. The amendment is coming into force from 1st October. Means this period during the year is buyback tax in force. Yes. Will the shareholder get exemption? Yes. And this period during the year is buyback tax abolished. So will shareholder pay tax? Because 1034A also abolished. Whenever an amendment takes place during the year, those students are unlucky children of destiny. You are supposed to know the previous law as well as the new law. Anybody who is giving exam in May 26, this is the applicable law. In fact, I am not even going to teach buyback tax for 1034. You all are the last people. Profit on buyback is taxable for shareholder like any other capital. You all are the last people who I am teaching this. And you have to be very careful if they ask you this question in exam. They will ask you 1st July, the buyback tax, therefore profit will be exempt. And then they ask you 1st September, same answer. Institute does this, huh? They ask you July, they ask you September. And you start thinking, but sir, one must be old, other must be new. No. They purposely do this. If one is September and other is October, then first one is exempt, second one is taxable. But you be very careful. The law has changed from 1st of October. Is that understood by everyone? And off late, I have also started this small thing called making complicated concepts of income tax law easy by making videos under 1 minute. Reels, we call them. Short videos. So when I started this, the first video that I made was on this buyback concept. Dekho? Anything off topic, we're ready. Dekho. Okay, wait. Let me see. If it happens in 10 seconds, I will do it. Much network is going on. Okay. Welcome to day one of making complicated concepts easy. अगर आप किसी कंपनी के इक्विटी शेयर होल्डर है तो 1 अक्टूबर 24 से आने वाला है आपके टैक्सेशन में बहुत बड़ा चेंज. From 1 October, companies are no longer required to pay any taxation on buyback of equity shares. इसका मतलब as a receiving shareholder, वो अमाउंट जो आपको मिल रही है immediately taxable होगी as dividend under income from other sources without any deduction. और इन शेयर्स को acquire करने का जो cost of acquisition था, that will be considered as a capital loss which you can adjust against capital gains in future of the remaining shares जिसका buyback नहीं हुआ या any other asset. अगर आपको भी ऐसा कोई कॉम्प्लिकेटेड कॉन्सेप्ट शॉर्ट वीडियो में सीखना है तो डू कमेंट. वो सब ठीक है. वो दैट आई डिसलाइक बीइंग एन इन्फ्लुएंसर. आई डिसलाइक बीइंग अ सोशल मीडिया person. I was never one. I have an account on LinkedIn. I have never logged in. Some years ago, I was active on Facebook. WhatsApp stories, theek hai, I am sometimes active. I was never active on Instagram. Only in the last 1.5 to 2 years, I have been spending huge time with CA inter students. Like literally, we have become friends. And that keeps me updated with the Gen Z culture also. And one thing they suggested, sir, if you want to be in public glare today, you have to be on, active on Instagram. Otherwise, out of sight is out of memory. It is like that. So become active. And they have pressurized me to do this. If you see whatever Instagram activity you will see in the last 1.5 to 2 years. Before that, there was nothing on Instagram. Nothing. So yes, there are about 8-9 videos I've already. The point is that influencers have to only make videos. They don't have to take lectures. They don't have to make books. I have got 50 thoughts, concepts ready. but I don't have the time to sit and record these videos. One day I'll take a break from everything. In one day I will record 50 videos and every day put one. Every alternate day put one. Because influencers have no other job. But ऐसा 8-9 videos I have already put up. You can like, share, subscribe, hit the bell button, never miss an update. So ladies and gentlemen, ऐसा तो towards the later part of the video, whatever I said that it will be taxable as income from other sources, no deduction, all that you will not understand. Now that you will understand one day when we do income from other sources. Just to let you know, when this is abolished, that means is the shareholder supposed to pay tax? And therefore, just to let you know, it is going to be taxable under IFRS. Now, how that calculation will take place, right now you will not understand. You don't know what is capital gain, capital loss, what is other sources. Let the heads of income start in IFRS. I'll teach you. For now, the only thing that you need to know, if the date of transaction is this, then it is buyback tax, therefore exempt. If the date of transaction is this, then no buyback tax, therefore it is taxable. Something that requires, almost 15-20 minutes, half an hour for explanation in class. But short videos are all about putting that concept in short. So, first timer may not understand that full video. But if you know the concept, then it becomes very, very easy. You know what is buyback tax. You just want to know what is the amendment that has taken place. So for such slightly expert people, it is a very, very... By the way, there are some other videos which are like for absolute laymen who do not know anything of income tax. Such concepts also I have covered. For more content, sure. I actually towards the end of the video also said that if you want to have a short video on any concept, then comment the concept. I'll make a video on that concept. Second video I purposely did not make on tax. I made the video on costing. My wish. I teach tax, but my favorite subject actually is costing. Because costing teaches common sense. Costing basically decides whether I should say yes or no to a particular proposal. What will I get and what will I lose? That's costing. Whether I should take a particular decision in business, in profession, in job, in relationships, everything is costing. What will I get? What will I lose? Simple. Today, if my neighbor's wife approaches with a proposal, so what will I get and what will I lose? It's costing policy. ABC analysis. But there are 3 flats on my floor, so A, B, C. Neighbor's wife approaches me with a good dish she has prepared. So what will I get? And the food that we made at home that I will lose. What will I get? What will I lose? I was talking about that, but I like the way you thought. All right, ladies and gentlemen, you understood. You have to know both parts of the year. Fantastic. With this, the section 10 exemptions are over. We only now have to learn in this chapter section 10 AA, which is deduction in special economic zone. I am not going to teach you the calculation first. First I will explain this, then I will explain this, then I will explain this, then I'll take all of them together. Let's start with the smallest of all. This is section 10 AA, ladies and gentlemen. This is not section 10. You need to first understand section 10 and 10 AA are not same, not same, not same, not same, not same. 10 and 10 AA are different. Are 10 and 11 different? 10 and 10 AA are as different. 10 AA is a section between 10 and 11. This we discussed yesterday, so it becomes very fast for you. Now, second thing, 10 AA is not an exemption. 10 AA is a... It is not an exemption. Both are tax benefit. The word exemption or the word deduction, they result in tax benefit. Exemption ka meaning you are aware we don't have to pay tax. Deduction is also tax benefit because we are going to subtract. For example, chapter 6 you are aware. Life insurance premium, medical insurance premium. Today we spoke about 80U also. These are deductions. Yes, they are a tax benefit. But what is the difference? You should know the difference between exemption and deduction. Today we are doing a chapter called exempt income. One day we will also be learning chapter 6 deduction. Both are tax benefit, but that is still some difference. Are both tax benefit? Yes, so that is common. But exemption is something that will never be included in my income. If, for example, I have agriculture income, what will I say? This income is exempt under section 10(1)(0). What will I write in my amount column? 0. When an income is exempt, we write 0. But deduction is something that will be first included and later it will be subtracted. It will first be included, then it will be subtracted. For example, your life insurance premium or your ATU ka benefit, anything like life insurance premium. Are we going to get deduction tax benefit of that? But we won't be subtracting directly from our income. I'll explain how. Supposingly, I have salary income of 5 lakhs and I have agriculture profit of 10 lakh. So, what is the total income in the year that I have earned? I am not asking taxable. We know agriculture is not taxable. Earned 15. I can do whatever I want with my money. I have paid life insurance premium of 40,000 rupees. So, the difference is this is exemption, but this is a deduction. Tax benefit I will get on both. But the difference is exemption won't be included and deduction will be first included, later subtracted. So, if I have to compute my NTTI, how am I going to do it? First head of income is income from salary. What will I write in salary? 5 lakh. Then there is no house property. I am only doing agriculture business. So in PGBP, what will I say? My agriculture income is exempt under section 10(1), therefore 0. Do you understand exemption? Not included only. This total will be called gross total income, 5 lakh. And from this gross total income, I am going to get something called a deduction. This is a section 80C under which I get the deduction of 40,000. That means here I am not writing 4,60,000. I am not subtracting at the top. In the total, everything will come. And from that total, I will be subtracting. First include and later subtract. That is the concept of deduction. Take this 40,000 ka benefit and whatever is your answer. 80C. 80U is for disability. This is life insurance. 80D is medical insurance. For different activities, there are different sections. Chapter totally is known as 6A. But for activity-wise section will change. Life insurance is covered in which section? Supposingly this person was disabled, then that person will get 80U. That's a different section. But all the sections, whether 80C or 80U, they are deductions. Example, this person is disabled and is eligible for 75,000 deduction of 80U. So here I will not write 425. Here I will write 5 lakh only. But here I will subtract 75. First add, then subtract. So when you don't add at all, that will be called exemption. But when you add and then later subtract, that will be called deduction. Exemption will never be added. Deduction will be first added, later subtracted. Section 10 is exemption. But 10AA is deduction. You understood 10 and 10AA are different. You understood 10AA is not an exemption, it is a deduction. Now let us understand what is this. Then we will learn the full thing again. What do you mean by special economic zone? Supposingly this is India, Gujarat. India. Is this place in India? Sir, now don't ask, sir, this is Gujarat or MP or Rajasthan or Chhattisgarh or yeah. India. Is this India? Is this place in India? Is this physically located within the boundary of India? But close your eyes. Don't sleep, huh? Close your eyes and imagine that this is not in India. Close your eyes and imagine that this is a territory outside India. Because this territory will be given special tax treatment. In India, there is a law called SEZ Act 2005. Some of you all were certainly not there. SEZ Act is 2005. So some of you all were not there for sure. Under the SEZ Act, whenever Government of India wants, Government of India can declare a particular region, a particular zone as special economic zone. If government feels that this area has to be financially developed, there has to be industry set up here, there has to be employment generated here, the government will declare that as SEZ. Now what will happen once an area is declared as SEZ? Huge amount of tax benefits will be given over there. I'll come to income tax later. Once upon a time in our country, there used to be service tax. But any service within SEZ, no service tax. Once upon a time in our country, there used to be a tax on manufacture called excise duty. Excise duty is still there on all your favorite products like petroleum products. All your favorite products, alcohol. Because favorite was the hint. Alcohol, petroleum, they are all under excise. They are not under GST. So tax on manufacture was excise, but there was no excise duty for manufacturing in SEZ. Now, of course, for most industries, excise, service tax, etc. have been removed because they are all put in one law, that is GST. I don't know whether you have reached that level of your GST, wherein you should be aware that any service provided or any goods sold within SEZ, there is no GST. It is covered in exemption. So you know what is SEZ because there is no GST in SEZ also. So ladies and gentlemen, likewise, now we are going to give you income tax benefit also for a period of 15 years. When you enter SEZ, from that year, we will give you a 15-year income tax holiday. This 15-year period will be divided into 3 slots of 5 years. Year 1 to 5, we will give you highest tax benefit. Year 6 to 10, we will slightly reduce your tax benefit. And year 11 to 15, we will give you lowest tax benefit. Year 11 to 15 comes with certain extra conditions also. There is a different calculation also. So leave this for CFI and focus on the first 2 slots. In the first 2 slots, are we getting tax benefit? I have to teach you what is that calculation because this is not exemption. If it was exemption in the amount column, I will directly write 0. But here what is going to happen? Whatever profit I earn, I have to write it in the amount column. If I earn any profit in SEZ, I will write it here. Then that will come in my total also. And whatever calculation I teach you, that amount will be subtracted. Because it is not an exemption, it is a deduction. And deduction means we will first add, then subtract. So what is that calculation? At inter level, you are supposed to know only the first 10 years. Before I go to the calculation, first a couple of conditions. You should know that SEZ ka benefit came with the SEZ Act in 2005. So they added a condition that you have to commence your business in the previous year 2005-6 when SEZ Act was enacted up to the previous year 1920. So they roughly gave a 15-year period to enter SEZ. And then because in 2020 we had COVID, so they extended it to maximum 30th September 2020. Which means basically, ladies and gentlemen, the last date to take entry in SEZ for tax benefit was 30th September 2020. Today, a new person going and starting business in SEZ will not be eligible for any tax benefit. The last date is gone. Sir, and the last date is gone 4 years ago, can you see? So today SEZ is relevant or irrelevant? Relevant. Because once you have entered up to this date, you will get 15 years. SEZ ka benefit will stop after 15 years from this date. Did you observe the date is to take entry in SEZ? After entering, benefit can be taken for the next 15 years. This end date is only to enter. So yes, a new person going now will not get benefit, but those who have already gone till this date will get the benefit. Is that clear? So true or false? Today, a new person is not allowed to go to SEZ. Today, true or false? Today, a new person is not allowed to go to SEZ. False. You can go. You can start business. You won't get deduction. There is no prohibition in going. Correct? Eh? Those who have gone till 30th September 20 are continuing to avail their deduction. Is that clear? So there was a date for entry, and yes, you have to be doing export of any article. Bro, not CA wala article. Just in case it was not clear to you. Thing. By the way, in articleship, CA students are treated as things only. You don't have experience, no? When I teach SEZ to CA final students, at that time, I tell them this, that they relate to this because in office they get treatment of things only. Articleship has always been the worst phase of CA students' life because first time, you get the experience of somebody being your boss. Today, you are the boss at home. You try to be the boss of your parents also. But unfortunately, articleship will not give you that privilege. We had 3.5 years, you all have only 2 years. So institute realized that poor articleship experience is prohibiting people from entering the CA course. They're doing their best. They reduce number of papers, they've reduced articleship tenure. But yes, there you will be treated as a thing. You just take a deep breath, start your articleship, and wait for those 2 years to get over. Even if you are exploited, your constant thought should be, what benefit I am getting? Because even if you are exploited, you're definitely getting something. In terms of knowledge, in terms of, you work in very, very big firms, no? They will affect your education for sure because they will not give you time to study for your CA final. Lots of things will get affected. But they will give you massive money. What is your criteria? Getting 20,000 per month. If you are greedy, you may join an extremely big firm. But problem is that you will affect your CA final study. So your goals are short term or long term. When that interviewer will tell you, no, I will give you 20,000. At that time, see, you have not earned a total 20,000 in your life till now. Unless you are a performer, piano, वगैरह performances में, if somebody has paid you, you've done paid performances. That's a different thing. You are, professionally sports person, etc. And you have been paid. That's a different thing. Otherwise, a normal student, till you complete your education, total 20,000 also you have not earned. And you are getting per month. So at that time, no, there will be some greed. And these days, students, criteria has become. I know of a student who chose articleship on the basis of two factors. Sir, this office is next to my home building and they are paying 10,000 per month. Small firm, but they are paying 10,000. Bro, you are an idiot. Because office is in the next building. They are sending you for audit work. Sir, I don't want to travel. Arey, idiot, 80% of Mumbai travels for 4 hours per day. Coincidentally, this physical location is okay 10 minutes away from my house. Otherwise, for 6 to 7 months in a year, I am traveling for 3 to 4 hours per day. In a city like Mumbai, you cannot survive without that traveling. You are not understanding that what is the purpose of articleship. And please take that decision now. Problem is that you wait for your result. Mentally, so you are ready only that I have to give the next attempt. And you are like, oh, pass. Now, those who are failing, no, I have seen this as a teacher. The people who have failed are not sad because they know what I have to do. Study again. People who have passed both groups, they come to me crying. Sir, I am not understanding only, sir. This form I go, that form I go, there I go. Sir, I am so confused. Means after passing they are sad. Problem is today you are not thinking. No. You are waiting for your inter-car result. Ideally, the day Immediately after your result should be commencement of articleship. You have to undergo those IT and OC courses of 15 days each. Students, such idiots, I am telling you. Complete your exam. Very next day, see where is the batch available for IT and OC. By the time your result comes, complete both of them. Because you cannot officially start articleship without passing inter, without completing IT and OC. Unofficially, I have too many contacts. I can send you on the next day after exam also. Work for 2 months. But on paper, we can't write those dates. Because till now, you have not cleared C inter. But my contact I can do that setting. That we will write the date after getting your result. But I can arrange that 2 months ka holiday for you, which you have already worked before your results. I have that setting also. Or even if you don't want that setting, at least complete ITOC. Results during that period while you are completing ITOC, also complete your interviews. The day after result should be commencement of articleship. Literally, I have seen idiots who have wasted 1 or 2 months after their results to decide where to join. Some are like, sir, ITOC ka batch is only not available. Post exam, ITOC batches are highly in demand because everyone is free after exams. They want to complete. At that time, batches are not available. Even now, I have told May 25 students, Jan 25 to be specific, that keep checking which batch is available. Immediately join. Don't waste a single day. Because otherwise, they will lose their November 27 ka CA final. One of the students in a place called Mulund in Mumbai, she cleared September 25 ka exam. September 24 ka CA inter ka exam. Officially, her final ka attempt should have come in May 27. She was getting ITOC ka batch in that part of the city. She did not take it. She said, sir, I was waiting for batch in the other part of the city, that is BKC. I said, in fun, I asked, because better crowd counts there, no? She's like, yeah, sir. I said, 2 tight slaps I will give you. Pagal ladki, you have any brain? What you have done? She has actually lost May 27. Like literally, I spoke words which are inappropriate to be spoken in front of a female. But she knew that I am speaking for her good. Student of your age only. I said, what nonsense you have done? Do you understand the importance of 6 months? Just because you did not select IT batch which was available. Why? For better crowd. And believe me, that better crowd is of no use. Because you are CA students, nothing is going to happen. Be mentally ready. Nothing is going to happen. Please make sure that you finish your IT, OC, everything. Sir, decision of big firm, small firm, where you have to work is subjective. You may be suitable for big firm, you may not be suitable for big firm, you may be traveling, you may not be traveling. It is customized to every student. And I do conduct mentorship for individual, again, marketing. Anybody who wants that mentorship has to fill that mentorship form on our website and take an appointment, and team will guide you for other things. Which articleship suitable, which articleship is not suitable, where you should work, where you should not work. It depends from person to person. Personally, I am against Big Four culture because they limit your brain. They make you specialize only in one particular area. You don't even know what the other team is doing. Smaller firms where there is less staff, they give you exposure to everything. Like literally, ideally, in my opinion, firm should be a firm where you only open the office and you only close the office in the evening. You are almost the boss. You are only next to the boss. Because there is less manpower. He will make you do income tax also, GST also, company law also, all types of audits also. If he is going in a client meeting, every boss wants to show that I have some assistants. But you are the only one. He will take you how to negotiate with clients, how to speak to them, why are clients scared of their chartered accountant, what is their aura, what is their persona. Big Four will never teach you. Because the partner will finish all the meetings. So sometimes you will have to bring tea also. Like, what do you expect? That boss will bring tea for you? You don't do that for your parents. You are thinking about it as an employee. Why can't you consider your boss will mostly be your father's age only? Your mother's age only depend on male partner or female partner. Why can't you see that if there is no problem in me making or bringing tea for my mother? Bro, I don't know how you think, but even today, we are Marwadis. we don't start our work before worshiping. If my maid, and as it is said that you should not be doing diyas in your home or office without first sweeping the floor. If the maid is not present, I do it by myself. No job is inferior, only mentality can be inferior. Any person who is working hard to support his or her family deserves respect. I have got no shame in cleaning my own house or my office. Consider that as your office only. What's the problem in sweeping the floor also? And believe me, no boss will tell you to do. No boss will tell you. Maximum they can tell you to bring something from a shop which you all can sit and enjoy together also. Food, food. Or if there is some guest or something, maximum. Watch that web series on Amazon Mini TV. There is a web series called Jamna Par. It will show you the difference between a big firm and a small firm. And in times of difficulty, that small firm will be available for you. Big firm will treat you as a resource. But personal opinion. If you want to join Ambani or Adani or Tata or Birla or any such company as CEO, CFO, something like that, then on your resume, you need Big Four. That is an easy entry ticket. Not that other people don't get, but it becomes easy for you if you have become, or if you have come from Big Four. Very easy. The point is that if you go and work in a company like Tata, Birla, Ambani, then lifetime you are going to remain an employee. There are second level companies which may not be as popular as, you going and telling someone that I work for Adani or I work for Tata or I work for Birla. But there may be a company called XYZ which is paying you almost the same amount, but not very famous. So what is the problem? And that company will take you even if you are not a Big Four article, smaller firm, medium firm, because everyone wants manpower. So is your goal to lifetime be an employee in the corporate world? That, sir, one day I believe that I will join a company as a trainee and I will retire from there as director. Today, Hindustan Unilever ka managing director once joined as an employee. You get promotion, you become CEO, MD, chairman and retire. Shareholders vote for the person who has worked for maximum number of years and good for the company. Good leadership. You decide who will be your chairman. You can spend your life like that, or you may probably create your own brand. If you work in second level ka company, few years you work, save some capital, and then have your own organization. Multiple options. So basically, where you should do it, articleship, it depends on these factors. The thoughts may be different from student to student. My requirement, I am not saying that you come and take this mentorship from me or pay me for the mentorship or that. I am the last person on the planet who will do any kind of marketing. My simple request is take your articleship call of where exactly you want to work before getting your results. On the day of results, you should not be thinking, where should I go now? That should get over before starting articleship. Before getting your CA interca results. Don't waste time. Because I see some students who have lost their precious 6 months. Jan ka problem is what? If you start your articleship up to 31st March, then you will be eligible for November 27. If articleship has not started up to 31st March, then they will lose 6 months. They will go to May 28. But for starting articleship, result will come when it has to. Your ITOC has to complete by that time. And you need to finalize on a form. If you end up wasting a few days also, you never know. You go to 1st April, disqualified from November 27. Share this with someone who may need it. I have already made a video and shared it with the students of the previous batch. But they should be made aware. That way for May, you are safe. You will be eligible for your May 28th attempt. But then, the earlier you start your articleship, the earlier it will get over, the more time you have towards the later part for your CA final ka self-study and revision. Why can't we plan in advance? So all these factors are relevant. Yeah, article word pe where drift mein point come back. Point is this, that you should be in the business of export and you should be commencing within this much. So there are many more conditions also. For example, it is compulsory to get a CAI report. If you have two businesses, one in SEZ, one in non-SEZ, then their internal transaction should take place at market price. Otherwise, what will people do? From my SEZ business to my non-SEZ business, I will purposely sell at higher price, show more profit in SEZ and take deduction. So there are plenty of conditions, but at inter level only this much is relevant. The main thing that you should learn is the calculation of the deduction. First, I will do business in SEZ. From that business, I will be exporting a few goods and I will make some profits. That profit will be written in my PGBP because it is not exemption, it is a deduction. That profit will come in my total because it is not exemption, it is a deduction. And now time has come to claim my deduction. Deduction will happen in two steps. In step number 1, I will compute something called my qualifying amount. Step number 1, I will compute something called my qualifying amount. Take your profit in proportion of export on your total turnover. Are you doing export, which is making you eligible? But can you have some local business also? So what percentage of your business is export? You understand the ratio? So do you realize this is basically my profit in ratio of export? Very easy to understand. Supposingly I have local turnover 4 crore and I have export turnover 6 crore. So what is my total turnover? Do you agree that it is 60% export? Now in 10 crore, my profit is 1 crore. Am I taking a reasonable net profit ratio of 10% on sales? Example, in any case, figure can be anything else. 1 crore is my total profit. So how much I will write in PGBP? 1 crore. How much will come in my GTI? 1 crore. Now I will find out my qualifying amount. My deduction will be calculated in proportion of my export. That is my 60 lakh is not my deduction. Hello. 60 lakh is qualifying amount. 60 lakh is my qualifying amount. Do you agree and understand? Step number 1 will be qualifying amount, profit in proportion of export. And in step number 2, we will get our deduction. From year 1 to 5, we will get deduction of 100% of qualifying amount. So supposingly this data is from year 1 to 5. How much is your profit? 1 crore. How much you will write in PGBP? 1 crore. How much will come in total? 1 crore. Then you find out qualifying amount in proportion of export, which is only 60%. So 60 lakh. And how much is deduction? 60 lakh. Means here I will write 1 crore and here I will subtract 60 lakhs. If we give it as an exemption, it will become fully zero. You understand why it is a deduction, not an exemption? Because we want to give limited benefit. The moment we put anything under exemption, it becomes full tax benefit. But whenever government wants to give limited benefit, they will put it under deduction. So here I will write 1 crore, but here I will subtract only 60 lakh. If the data is from year 1 to 5, is it possible it is year 6 to 10? Everything else is same. Deduction will be 50% of qualifying amount. I told you maximum benefit first, then second slot reduce. Year 11 to 15, it will further reduce. It is 50% of qualifying amount, or there is some investment that you have to make, whichever is lower. But all that complicated part and the additional conditions are a part of CA final. If this data, you have to learn year 1 to 10. If this data is of year 6 to 10, so how much will you write in PGBP? Still 1 crore. How much will come in total? Still 1 crore. Qualifying amount is still 60 lakhs. Deduction will be 30 lakhs. So how will my presentation be? Here I will write 1 crore. Here I will subtract 30 lakhs. Or let me do the presentation using the above example. If we are in year 1 to 5, we are in year 6 to 10. Salary mein how much I will write? Assuming the same assessing. PGBP mein how much I will write? 1 crore. So can I say 100 lakhs? Agriculture? Exemption, no. So 0. Exempt, no. So 0. This will become my gross total income. 105 lakh. Qualifying amount is in proportion of export. If I do more export, more will qualify. But my deduction under 10AA is going to be here 100% of qualifying amount and here 50% of qualifying amount, giving me my amount is not relevant, but this will become my net taxable total income. First include, then subtract. So 1 crore is included, but subtraction will not be on 1 crore. Subtraction will be on the basis of calculation of 2 steps. Step number 1, qualifying amount, profit into export upon total. And step number 2, deduction. 100% in year 1 to 5 and 50% in year 6 to 10. Everyone is clear on this? 100%. Fantastic. Excellent. Ladies and gentlemen, that was your SEZ. Now, if I have to teach you or tell you about how SEZ ka chapter is presented for, I told you that this book will contain everything, but this will, of course, because it's a CA final book, it will contain the extra syllabus also, which is applicable only to cryptocurrency. You are aware? Taxation of buyback. Have we studied this? 115 QA. Final, we have it in more detail. So, yes. 23.296, same thing I have taught you. 20 plus 12 plus 4. Final, we teach students the interest for late payment of buyback tax. Buyback tax actually is not a part of your syllabus only. Your syllabus is only 1034A. Okay? अभी अटक गया. Hey Bhagwan. I am not doing marketing, Baba. I am only showing something. Chalna, please. गुनाह है. अच्छा, basically maybe my tab is wanting me to tell you that late payment or non-payment is a crime. So you will be liable for interest for late payment, penalty for non-payment, etc. अभी हो गया. If it comes, I'll show you. छोड़. So, अरे मेरे को SEZ दिखाना है, please. In the meanwhile, you open your questions, no, because chapter is over. I have to just do the questions. If it works, it works. Hey, chala. Did I tell you with effect from 1st October 2024? What amendment has taken place? So yes, of course, we have to put that amendment. Now see, as he said, 10AA. So many conditions. Have I also told you that start date is up to 30th September 20? At CA final, you have to learn all these, again stuck. At CA final, you have to learn all these conditions. But at intermediate level, your job is simple. Step number 1, profit into export upon total. हाँ हाँ, वो जो बुक नंबर 2 है ना. हाँ. Profit into export upon total turnover. Qualifying amount. First 5 years 100%, next 5 years 50. Is this a part of your syllabus? But the last 5 years, it is 50 but with extra condition. So whatever is not a part of your syllabus is not a part of your syllabus. So real chapter is very big, but inter students are supposed to learn limited things. Is that clear? हाँ, so ladies and gentlemen, that was our chapter called Special Economic Zone, and with this we get done with our chapter incomes not forming a part of total income. I believe that you have understood the difference between exemption and deduction. This profit will be first included, then subtracted. Honestly speaking, there cannot be actual full-fledged questions on exempt income, simply because what is exempt income? In a big question, they give you an income which is exempt. So the income which is taxable, you write, which is based on heads of income. An income which is exempt, in one line you have to say exempt, so amount column 0. See, questions will be formed on the sums that you have to solve by computing something. In exempt income, you don't have to compute, you have to say 0. So there cannot be full-fledged questions on a chapter like this, but whatever minor questions we have, let's discuss and finish. We have discussed about agriculture, notional business, notional percentages from tea, coffee, rubber. Okay, so we have question number 20 on page number 24. Question 20, page 24, and the culture of solving questions, bro. Somebody has to read loudly for the class, please.
Mr. Manish, a resident in India, has the following incomes for the year ended 31st March 2025. Income from sale of tea grown and manufactured in India 4 lakhs. Income from growing and manufacturing rubber in India 5 lakhs. Income from agricultural operations in Sri Lanka, cultivated paddy 1 lakh. Income derived from sale of coffee grown, cured, roasted, and grinded in India 2 lakhs. Determine the quantum of income which is regarded as agricultural income and non-agricultural income in the hands of Mr. Manish for the assessment year 25-26.
All right. We have to separate these amounts into how much is agriculture, how much is business. From the total, whatever is agriculture, I will write here on the left side. Whatever is business, I will write here on the right side. For example, income from tea. Now, it's about whether you have memorized or learned the percentages or no. Tea business. And one hint is that the higher percentage is always exempt. So, what is the breakup in tea business? 60-40. That means, can I say 3 lakh will be agriculture and 2 lakh will be 4 lakh, sorry. So, 60 is 2.4 and 40 is 1.6. 2.4, 1.6. Okay, next, rubber 5 lakh. So, how much is agriculture? 65%, 3.25 and 1.75. Is that correct? Next, paddy is rice. Huh? So, this is not tea, coffee, rubber. It is completely agriculture. So, full 1 lakh we will write under. Huh? Sri Lanka is not in India, at least right now. You never know, at any point of time, West Bengal can go in Bangladesh, Sri Lanka can come in India, matter of time. So here for now, full 1 lakh will go in business. And coffee, I told you that grown and cured, if the question stops, answer is different. You have to search for words like roasted, grinded. The moment you see this, what will be your answer? 60. So here we will have 60% of 2 lakh, 1.2, and here we will have 0.8, giving you total of agriculture and business as how much? Is it 6.85? So total also has to match, no? Confirm the total also. How can you make such a silly mistake? 5.15, total coming to 12 lakh rupees. I hope there is no confusion. Don't make such silly mistakes. You can't be making totaling errors at this level. There are already so many other errors that you have to make. It's a CA exam. Don't make silly mistakes. Everyone clear? Chalo. There are some, examples on partial integration, but as you are aware, I have not covered partial integration. I will do after tax rates. Okay. Buyback ka highlighted amendment I have taught you. SEZ ka question number 21 on page number 28.
Surana Limited has one unit at special economic zone, another unit at domestic tariff area.
1 second. Just to let you know what is domestic tariff area. Any place which is declared is special is special. Any normal place which is not special is called domestic tariff area, where all domestic taxes normally locally will apply. So special is special. What is not special is domestic tariff area. So do you understand the data of a special economic zone plus the data of domestic tariff area is the total financial data of the company. It is like business A, business B and total. So what are the two businesses? SEZ and DTA will make the total of the company. Make sense? Chalo.
The company provides the following details for the previous year 24-25. Particulars total unit in DTA. Total sales 6 crore and 2 crores.
So understand, this is total sale of the company and this is the data of DTA. Do you understand SEZ plus DTA equal to total? So do you understand total company data minus DTA data will give you SEZ data? We are not interested in the other data. Please understand. Our deduction calculation will be dependent upon the SEZ data. So the total sales, the export sales, the profit, we are not interested in company ka data. We need data from SEZ. So if company ka total sale is 6 crore and DTA ka sale is 2 crore, then what is SEZ ka sale? Do you understand now what data we are deriving? Fantastic. What next?
Export sales 4 crore 60 lakhs, 1 crore 60 lakhs.
That means what is the export of SEZ? 3 crore. Make sense to you now?
Net profits 80 lakhs, 20 lakhs.
And therefore SEZ profit is. So bro, whatever calculation we will do of 10 AA, we will do of this data. Do you realize? We are not interested in the data of DTA. My first question to you is, this is 60 lakh rupees. So how much will go in PGBP? See, deduction whatever may be the case. How much will go in PGBP? Full rubbish. 80 lakh rupees will go in PGBP. Total profit of the company is PGBP. It will come in GTI. And for deduction, we will use only the SEZ data. What is given to you? Compute the total income in the following situations. If both units were set up and start manufacturing on 22nd May 2016, and case 2, if they set up and start manufacturing on 14th May 2020. Sir, what is the difference? Date is different. Thank you. What is the difference in my calculation because of this? This will be in the first 5 years. You understand? 2021, 21, 22, 22, 23, 23, 24, 24, 25, 50. And this, I have already completed 5 years. That means here I am in year 6 to 10. Therefore, here I will get 50%. And here I am in year 1 to 5. Therefore, here I will get. But this 50 or 100 will not be calculated on 80 lakh or 60 lakh, bro. This will be calculated on your qualifying amount. So, how are we going to do this? Our first step is going to be calculation of qualifying amount on the basis of SEZ data, which is profit into export upon total turnover, that is 45 lakh. And then my step 2 is going to be calculation of my deduction. In my case 1, I am going to get 50% because I am in year 6 to 10, and in my case 2, I am going to get 100% because I am in year 1 to 5. Do you understand this? Of what? 50 or 100 of what? So here my deduction will be, and here my deduction will be. Obviously, question is asking you NTTI. So what do you do? Here, profit minus the deduction. Profit minus the deduction. How much profit? 60 lakhs. No, sir. Profit is 80 lakhs. You understood? Whatever is the amount, this will become your net taxable total income. Clear hai? Everyone? Fantastic. Question number 22. It is a printed answer. If I see you reading the answer, I am going to take you home. You all have to go home only after my lecture. I will drop you home. And you will be riding without helmet. That fine also I will take from you. And I will be hitting you all throughout the way. You don't want to do all this? No one reads the answer. Solve it. Show me your solution. And you may leave one by one. You solve it fast, you get to leave early. Question number 22. Please solve it. And solve it with your brain and hands and book and pen and notebook, not with your tongue, please. Tongue usage not required. Brain usage, please. And with this question number 22, I am going to leave you. Today's lecture will come to an end. Tomorrow we will be starting our heads of income. Tomorrow, no, Sunday, Monday, we will be starting heads of income.